Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live on this Thursday morning. In studio, we have the one and only Tracy Shuchart, otherwise known as NinjaTrader's senior economist. Good morning, Shai.
Good morning, everybody.
And of course, we got Jimmy wearing his Carolina blue. He loves to showcase that he's out there in Charleston, that Carolina blue. Senior market strategist, Jimmy Cagnina. Good morning, Jimmy.
Good morning, everybody. Special shout out to Wulong Abba from Brisbane, Australia. It's 10 o'clock at night. Thanks for being here with us on NinjaTrader Live, man. Appreciate you.
Yeah, that's awesome. That's a great call out. We've got Firmament, who's also joining us from Ancona, Italy this morning. That's pretty nice. I mean, I think he's rubbing it in our face a little bit. I mean, I think it sounds nice, but he's like, yeah, and we're heading to Greece soon. Yeah, thanks. Thanks, buddy. Good morning, Engineer Beer, My Serona, Paul, Buff Boy, Xsoft, Lunatismic, Bob, Mark, Anant, 2020, everybody else on chat. Thank you. Good morning. As I said the other day, we hit 130,000 subscribers, and that's 18,000 since we've started NinjaTrader Live, and we're only in week 9. So hit that like and subscribe button early this morning, as we've got a big lineup today. We got Peter Atwater. Of course, we've got Pharm. We've got Tanya at 9, and we got Christian with live trading, and then followed up by our boy Stowe at 11. But before we get to all of that, bonds matter. I mean,
bonds suddenly matter.
We only talk about it every day in here, and I said, they matter, but it's always about the velocity. We'll get into that more, but Go over this bond auction.
Right. So it was a 20-year bond auction, which, to be sure, most markets don't react this crazy to a 20-year bond auction. Mostly investors prefer to watch the 10 and 30 years. So this is kind of a different bond auction. So we really haven't seen market gyrations like this on this bond auction. But 5.047% was the yield, which is 1 basis point higher than 5.035 which was the yield when the auction went on. So it was higher than they had, which means kind of indicates that there is tepid demand, because the government is out there saying how much higher yield will it take for you to buy our bond, right? And so it's 1 basis point higher, and it was being at over 5%. Compared to the last six auctions, the average was 4.6%. So quite a bit higher than the last auctions, which means, again, the government's kind of bribing you to buy our bonds. It was the first time that the 20-year was over 5% since October 2023. If we go back to the pandemic, it could sell the 20-year debt at 1.2%. Now we're at over 5%. So it really signals that demand is weak. The underlying concerns in all of this is the ballooning U.S. deficit, right? Fiscal policy uncertainty, inflation expectations, they still remain sticky. And we've seen some waning foreign demand, particularly from China. We've talked about this. We don't know if they're stashing bonds offshore in the Caymans. But, we certainly have seen a pullback in, buying from Asia. But we have seen an uptick from the UK. What is interesting is GS had a note out on yields this morning, and what they said is the 10-year Treasury yield is nearing the pain threshold for the equity markets. Based on their calculations, when the 10-year bond yield moves higher by 2 standard deviations within 1 month period, the stock market then comes under pressure. And then this is a quote from them. It said, at what levels do yields start to put real pressure on the stock market? The big easy round number is 10-year at 5%, but the answer is more nuanced, as above 4.7%, because of the velocity, just what you're talking about, the move in rates matter much more. than absolute levels. So it's the velocity they're saying. So their absolute number is 5%, 4.7% will cause a problem, just what we saw, because of the velocity of the move.
Yep. As I've been saying really since day one on this network, and this is something I've been following for decades, the velocity of the bond market is always something we watch. It's not anytime. Here's the one thing I think everyone has to understand about indexes. They can take anything in stride. They always find ways to make money. But when the bond market moves quickly, it changes everything. It changes money. It changes credit, right? I mean, it changes the way everything happens within, business. And so no one can adjust quick enough when rates move that fast. Right. And that's the biggest thing. And so, again, it's funny, at the times we talk about, well, it's like, oh, we're not noticing the bond market. Well, in reality, the market is noticing it, but it's able to adjust their future, again, even though we're looking at it on a tick-by-tick basis, we're saying, oh, gosh, the market's been bleeding lower. How can these big companies adjust in that period of time? Well, they're looking at it going, yeah, we think rates are going up on the long end over time, but they're like, okay, over time. But all of a sudden, if it happens like that, everyone's like, well, wait a minute. Instead of, 6 months, 12 months, 24, 48 months down the road, they're saying it's 6 weeks. And that changes things.
Right.
So, Jimmy, you're our bond guy here. Talk to us about that move yesterday.
Yeah, I mean, it was just to follow up on what Tracy was saying. I mean, it was, 39 billion was tendered and only 16 billion was accepted. That's how bad it was. Excuse me. And Waller went on this morning. Waller's talking about, well, the Fed won't even buy these bonds. I mean, he didn't say it that way, but he did say that. I was like, what? But look, this thing is like falling out of bed. We've broken through the calendar year lows right now. Those mid-January lows. We're at a 110 handle. And when you see a velocity, man, yeah, thank you for pulling that chart up, Mission Control. I mean, this is falling out of bed. We've had 3 major red candles. We broke through my 113 area support. We broke through my next area support. That's like a 110.25 handle. Now we're driving even lower. This could be pretty ugly right now. Stochastics are in the basement. They just got there too, so they could stay oversold for a long period of time right here. Trend channel fully intact right now. And I think last time I checked, the cash yield this morning was like 5.089 or 5.09, something like that. So this is pretty ugly, and it's going to weigh on a lot of different markets from a risk-off point of view.
No doubt. And again, watch the bond market, even if you're not trading it, for the velocity of the move. I'm going to say it all day because as people come in, I want them to understand this. And if the bond market were to slow down today and stay near the lows, I think there's always a chance that equities can catch a bid. Equities want to go higher, and they'll always find a way to go higher. But when the bond market is moving quickly, that is the story right now, and we can't really get away from it. Vixpiration, did that have any impact?
So, no, we didn't really see much impact. Really, the story yesterday was that 58.75 strike on the S&P. We had a boatload of short puts there, meaning they're long the market. So when the market dropped, that sort of became our battleground, and then when it broke through, that became resistance. And basically, what happens is when you're short the put, you're actually long the market. When you start moving below that strike price, you need to hedge your position, and that either by selling the underlying, so you'd have to sell. You'd have futures, or you have to buy back your put.
Yeah, and you're always going to go to the futures 99% of the time. Yes. They're more liquid, and you get better bang for your buck immediately.
Yep.
And so that's what happens. People forget what futures markets are really used for, right? In times of hedging, there's no better bang for your buck than the futures markets. If you're long a bunch of stock, and all of a sudden you think the market's going to go down, let's call it 1 to 5%. Let's call it in a short period of time. You sell futures.
Yeah, absolutely.
That's why we go down quicker than we go up. People don't get that. That's why also when we go up, it's a lot easier to trade like NVIDIA because you want to buy the leader of the market going higher or Meta, whatever. But when we're going down, the best place to be short is futures. I mean, and people forget that that's the reason, because then everybody goes to a central place to sell them. They're not selling SPY
Right.
to go short. They're selling S&P futures. So again, this morning, when I look at the tape, what points out to me? Bonds, obviously. 110.07 right now is where the 30-year sits. 4.6% in the 10-year yield. Kind of bloody across the board. You've got crude down 1.5%. Natural gas down 1.5%. Pretty much all of energy is down almost 2% that we're looking at.
We did have some news on the crude front. There was an article overnight from Bloomberg that said that unnamed delegate said there is going to be another output hike of 411,000 barrels for July. That's triple the original amount planned. Then you had Morgan Stanley come out and said that that was their call as well. Goldman Sachs predicted the same, but said they see a pause after July. That said, those OPEC members do not meet until June 1st, so we won't have the final word on what their plans actually are until June 1st.
Yep. And because oil is lower, I was long Canadian dollar. I got trailed, stopped out on that. I know Shai's happy about that. I mean, I made money on it, so she's not really busting my chops too much. But, the Canadian dollar, I got trailed, stopped on it because obviously it's tied to oil a lot. And yesterday I actually got a sell signal on my 60-minute. I said, I'm going to keep it, and I trailed my stop just to make sure I made some money on it. So I got stopped out just below 72.18, but is what it is. I still have platinum. We didn't talk about the metals this morning. I think, I saw people even on Twitter talk about this. I think that platinum you're seeing the rotation from gold into platinum. I like that because I'm long platinum. But, boy, is that thing hard to hold a position in, though, Shai. I got to tell you, that thing is slippery.
It is.
I almost got stopped out overnight, not too far from it, because I'm trailing it. Because, I don't like having a ton of overnight risk right now in this market. I got to tell you, as a swing trader, this is,
Right.
for me at this point, I was a day trader majority of my career. I moved on to swing trading, and it is tough to sit in positions when you have so much news cycle. You know what I mean? It's just what it is. In this presidency, I got to keep stops tight. I got to make sure I could stay with a strong hand into positions. And platinum, it looks like it's going to keep going up. But I want to talk about that rotation from gold to platinum. Are we seeing that? I'm seeing people talk about that.
We are seeing some sort of rotation, and it's really, we've talked about the demand for platinum. It's there. We have a deficit. The supply-demand fundamentals are there. But what's really got this market excited is we're starting to see retail demand for it. So we're seeing actually like jewelry demand in Europe and U.S. and China in particular. You also have people saying, gold is at, 3,200 and, platinum's at 1,000. So maybe I should get some platinum bars, right? So you're seeing physical demand for it on the investment side, which we haven't seen in a long time. We haven't seen it since, platinum was trading at 2,300 and gold was trading at 1,000. Quite a few years ago. And so now we're seeing investment demand. So this market's liking that.
Yeah. Data this morning, Shai, give it to us quick. We're going to get ready to go to Jimmy and the Edge Report.
Yep. We have jobless claims, continuing claims, and S&P Global Manufacturing PMI, Services PMI, existing home sales, nat gas inventories, and KC Fed manufacturing. So quite a bit of data. I think your biggest market movers are probably everything except for nat gas inventories and existing home sales.
Yeah. And you're seeing futures continue to dip lower this morning. S&P is down on the lows, 58.36. I talked about 58.40 to 58.60 is a level I was targeting. I wasn't short into it, and I was looking to see if we can hold. We can't. Again, I think the biggest thing right now is that the bond market's weak. Rates are creeping higher. I think, again, reality sets in these markets, right, Jimmy? What happens is that the market goes from, over bearish to over bullish. We've talked about this. So I was saying it. We were like, it's just all of the day traders were saying, look when you get so stretched on a daily, you can't even come back to the 8-day moving average. And it's the complete opposite of where we were. And now I think we're coming back into more of a balanced type environment. I don't think that stocks are going to totally get roasted from here. I mean, we never know. But when I look at it and go, if the bond market keeps going down, this short-term down move, I think, continues to happen. And then ultimately, you look to see, does it start to break some of these, bigger key technical areas? And of course, we'll go to you, Jimmy, to see what that looks like this morning, because that's going to be the key. I think for now that on the medium-term time frame, stocks, this is the pullback that was needed, because all of a sudden it's not like, I mean, again, we get so exaggerated in this space. It's hilarious. That's it. The top
I know, right?
And I'm not saying it is or it isn't. I just
We're
don't
never
know.
going down again.
I know.
We're never going up again.
I don't know that's the case, but ultimately, it's going to be interesting, because we said we saw all that retail buying at the end. Remember, we were talking about that, Shai, too? And so, it's kind of a rebalancing. But Jimmy, let's take a look at some charts this morning. It's about that time, everybody. Let's take it over to Jim Cagnina for this morning's Edge Report.
Yeah, we already talked about bonds, so we're going to move on to my market of the day so far today. But one last word on bonds. I was on the floor back in the late 70s, early 80s, and bonds traded at a discount. That means they were below 100. We're at a 110 handle now. Came from 117 down to 110 pretty quick. So there's plenty of room on the downside, even though there's no apparent targets from a candle point of view. Moving on, though, the market of the day is Bitcoin, man. I mean, this is, maybe it's risk on again. Who knows? Me and Tracy have talked about this. Is this a risk on market? Is this a risk off market? Is this a flight to quality? It's a mystery. But look at this. We're breaking out to the upside 2, 3, 4 sessions in a row, making new highs. We broke through that 107,470 level on the micro Bitcoin at the CME. So this is a pretty strong looking chart right now. Intraday, we have some targets as well. We have that Menthor Q one-day max, which is framing the top of the conversation right now at 112.05. R2 is slightly above that at 112.240. And then look at that. A lot of just open space, a lot of blue sky. R3 is all the way up at 116.130. For the bears, we got that pretty important call resistance level here at 110 even. JAX 1, gamma exposure level 1, 109 even. So I'm going to keep my eye on that. I was surprised to see that this morning when I woke up. That was the big surprise market of the day. Let's toggle over to the E-mini S&P really quickly here. We're having a nice retracement, and I kind of agree with Deli. I don't think that equities are going to fall out of bed. I could be wrong. I've been wrong before. We do have that stochastics kind of moving down, crossing under and moving down from overbought. That's a little bit bearish. Right now we're below that 8 EMA. That's that orange line right there. We wicked up to it, couldn't hold, sold off a little bit. And I have a little baby fib retracement here that I'm looking at from where we started this recent leg of the rally back on May 7th to the highs. And we're at about a 38.1% retracement. Nothing too exciting to worry about here. Next step down is that 21 EMA right now, and that's at 57.67. Just drilling down intraday, all sorts of lines on my chart here. Let's take a peek for the bears here. I mean, look at this. We had a really tight range overnight. Super tight range. Look at the London initial balance. I mean, it was a nothing burger, really. And then we sold off. Now we're firmly below that session VWAP. That's that white line kind of curving around through my chart right here. Sellers are in charge right now. S1 is a really nice target right now. Deli, we've kind of went through, you posted your area of interest this morning between, I think it was 58.60 and 58.40. We're trading south of that right now. S1, 58.18 is the target. And then that one-day min, put support, all sorts of areas of interest down here at 5,800 on the downside for the E-mini S&P. Yeah, there's targets on the upside, but we're going to need some buyers to come in here to fulfill those. JAX 4 would be one possibility. Excuse me, 58.80, and then the daily pivot is up here at 58.88. Let's just take a peek at gold here, last minute or so, and see what's going on. We're still above that 8 EMA. We're still above that 21 EMA on a daily chart. We're still, trending up. I'm gonna go out on a limb and say that right now. We're above this anchored VWAP that I have back here from April 8th right now. A little bit of a pause. We have a small body of a candle today so far with a proportionate wick on top, a proportionate wick on the bottom, which is suggesting uncertainty today. I'm still a little bit bullish here at a 33 handle. Intraday, really quickly, we got some great targets here. Yeah, we sold off. We're trading below that session VWAP as usual, but that put support, we didn't quite get there. 32.80, that's that 0 DTE. We do have a target here, a really close target here, call resistance 0 DTE, approximately 33.19, 33.20. You could round up. And then R2 is kind of, and Jack's one, framing the conversation at the top, 33.50. We'll see if gold can recover today. That is today's Edge Report. Back to you, Deli and Shai.
Thank you, Jimmy. And we are now joined by Peter Atwater, President, Financial Insights. Peter, it's a pleasure to meet you.
Likewise. Good morning. Hi, Tracy.
Good morning. Hi, how are you?
I'm doing great.
So, Peter, the word of the day yesterday and today is bonds, right? And so, yes, they matter again. And, you know, Peter, rates have been going steadily up on the long end, really since the beginning of the year. They really mattered earlier in the year when we were going down. We saw bond markets making lows of the year, which is rates at the highest points. At the same time, stocks were. Then that broke apart, you know, and then we had a divergence, right? Bonds continue to stay weak. Stocks came all the way back. But yesterday, that bond auction sparked interest back into the equity markets to say, hey, you know what? It's not a linear path to all-time highs. We have to keep an eye on what's happening within the credit markets. Thoughts on the bond market and its impact on stocks right now?
Sure. So I've been watching the 10-year for a long time. And if somebody wants to pull up a 5-year chart of 10-year yields, one of the things you'll see is that we've had this massive narrowing coil for about the last 3 years. And why that matters to me as a behavioral scientist is that I look at coils like a huge sentiment tug of war, where the rope doesn't go anywhere, but there's an enormous amount of energy expended on both sides. And so what I always look for is a violent move once you see the coil break. And at this point, we've seen a shorter coil with a 30-year break to the upside with yields beginning to spike. I'm watching the 10-year like a hawk because to the extent that it goes, there's an enormous amount of real economic collateral damage that goes along with it, particularly in housing. And so what I'm paying most attention to is the narrowing band of 10-year yields. And to the extent they break to the upside, I think you could see not just risk off, but risk out in the markets. And this is something that I've been watching as well, which is we have risk in and risk out, no longer risk on and risk off. We're either all in, stocks, bonds, currencies, commodities, or we're all out. And that's a trend that I expect we'll see continue, just given how impulsive and emotional investors are today.
And I want to talk about confidence. Obviously, I've read your book, The Confidence Map, but are we currently seeing a loss of confidence in the markets with this volatility? And then therefore, how do we as investors, you know, make good decisions in trying to invest in this type of market?
Yeah, there's no question that there's been a deterioration in confidence, and you can see that in, you know, all of the references to uncertainty. But there's a second dimension, Tracy, that I think people are overlooking, which is the degree to which investors, CEOs, folks in general feel powerless. And that combination of uncertainty and powerlessness is really toxic to confidence. That is where you see the impulse and emotion really play out, and what we're seeing in terms of these violent moves up and down. And so I think for investors, the challenge is to plan for what you can imagine, but always be prepared for what you can't. Because these moves, when they occur, such as we've seen since April, are dramatic. But they're fascinating. I mean, even watching earlier this week on Monday, I described Monday's market recovery like a bunch of hyenas devouring the bear. That there's an aggression to what we're seeing in the markets that is a classic sign of low confidence.
And do you think this is part of, I don't even know if you subscribe to kind of the fourth turning concept, but do you think this is playing out in the markets?
I think we're seeing, I don't know about fourth turnings, but I think we are seeing, the classic signs of a major deterioration in global confidence that is concurrent and consistent around the globe. I mean, I don't think it is coincidental that you have, a large number of dominant independent nationalist leaders across the globe today. And that to me is a reflection of the low confidence of voters and their want to eject incumbents out of office. I don't think anybody gets a mandate as much as the mandate of, you are not the incumbent, and therefore you're better than the last guy. And so I expect we're going to continue to see a lot of political upheaval as frustration continues to mount.
We talk about confidence potentially being an issue, but we've not seen that reflected in spending, right, Shai, at all. It's the consumer continues to spend money. We'll see what happens when rates start to move up like this, what that does. And I go back to the rate situation. Is the Fed just in a pickle here? I mean, we know that they can't do anything to help the long end come down, and the long end is just what's running away from them right now as we see it. We're making. I know, Peter. Sorry, we would look at this tick by tick on this network, and the bonds are making new lows. But the point of it is that does this get? At what point do we start to see the administration and the Fed start to pull out tools to start saying, look, we've got to do what we can to stop these rates from running away from us?
Yeah, I mean, I view policymakers as reactionaries, whether that's on the fiscal or the monetary side. And so what it takes is dramatic market moves before you see the jawboning. Ultimately you see action. I think investors should view policymaker response as a lagging indicator. And so anytime they begin to do something is a reflection of the extreme mood in the markets. We saw that in April. But I wouldn't count on them to save things. I would count on them to arrive just as the fire's about to go out. And that's just their
Yep.
their nature.
Yep. And so I think that we're not too far from that, honestly. I think that we are going to start hearing more talk of that. We're only a couple minutes away this morning from jobless claims. Peter, you're going to be on here with us as that number might be market moving. Shai, can you do a quick preview of that? What's expected of jobless claims? Of course, everyone, I'm going to be keeping up the bond market because the bond market is what we want to be watching today. And we'll see what's expected so far, Shai.
So initial claims expected at 230K. Prior was 229K. They've been pretty consistent between 228 and 230 for almost all year. So obviously expected to be relatively in line, and continuing claims 1882. So 1.882 million, and prior was 1.881 million. So they're expecting numbers in line with what we have been seeing over the last few weeks.
Peter, just a minute out to the jobs number. When that number comes out, Shai will step in and tell us what that data is, so everyone in the chat and the viewers can know what the data is. But the job market right now, again, we talk about confidence a little bit. It's not really reflected in the job market either. I mean, the job market is still pretty strong. Your thoughts on that?
Yeah, it is, but jobs to me are a lagging indicator. It takes time for that behavior to change. If there's anything I think investors should be paying attention to, I know your focus is the US bond market. I'd pay attention to Japan. Japan is likely to be the Bear Stearns in this crisis. And so, you want to watch that because if it catches a bid, if you see the Japanese government do something there, it's likely to create a dramatic reversal or change in the tenor of the US market. One of the things I know is, from experience is the worst always go first. Japan has been very candid about its fiscal situation. And so I want to be paying really close attention to what's happening there, given its impact on all the other markets.
And claims did come in at 227K, so slightly less than the survey of 230, and continuing claims 1.903 million, so a little bit higher than expected.
So initially, Shai, lay it out for everybody. If jobs come in a little bit less than expected, bullish bearish for bonds.
I mean, this is relatively in line, so I don't think that it's in line with expectations. Continuing claims a bit higher, not enough to actually really move this market. They're going to start really worrying about the labor market. If we start seeing initial jobless claims at like 350,000 or more, that's when everybody starts to get worried. And I think that you'll really see a move in the bond market.
Yeah, so that's the number to watch for. Peter, back to you. My next question was going to be Japan. Shai and I talked about this. Mm-hmm. Explain to us the situation with Japan, because I think this is one of the things that, I know it's definitely not my world, and most likely not many of the traders watching this, it's their world either. We've only got a few minutes left with you, and I really want to stay focused on this because I do think it is very important. Explain to us how you see this unraveling and why this is such an important thing to watch for U.S. traders.
Yeah, there are two elements to Japan to me. One is the carry trade. Japan was the place to go to if you were looking for cheap funding. And so to the extent that those funds start to dry up as an attractive place, that has complicating effects to global markets. Second piece is clearly, national fiscal stability. And, we're beginning to see countries, developed countries really struggle here. And that is a dramatic change from what investors are used to. Investors think emerging markets, frontier markets. This cycle is likely to be developed markets and how do developed markets get their house back in order. So this is why Japan is so interesting. And you want to be watching their response. Is it a kick the can? Is it, decisive? What do they do there?
Got it. Any final comments on this topic for Japan, Shai? Because it's obviously important here.
No, where do you see this, yield curve going for Japan, and why is that important that it's suddenly the yields are rising in Japan when they, haven't been? So why is this affecting the market for people that are not watching Japan and kind of don't know what this means?
Yeah, they've lost control of the long end. Historically, the Bank of Japan has been the buyer, and so to see the long end untethered, what I would watch is to see what happens to shorter and shorter dated notes, and do those begin to really move as well? Because that would suggest that you've got investors panicked across the yield curve. And that's why the shape of that yield curve matters so much.
Yeah. Well, everybody, Peter Atwater, President Financial Insights. Follow Peter on Twitter. We will put that link into the chat. Hit that like button for Peter. Go check out his book and go to peteratwater.com. Peter, first time meeting you is an absolute pleasure. Thank you so much for your time today. I really appreciate it.
I appreciate the opportunity. Thank you.
Thank you.
All right, Shai. Bonds in Japan. You know, I mean,
So
we're not talking tariffs. We're talking bonds in Japan.
right. So I think we talked about this a little bit. He has if you go through his stream, he's got quite a bit of comments on that. So that's really something that if Japan gets shaken, that's going to rumble globally. So you're going to feel it here. So it is something to keep on your radar, even if you are just trading the U.S. Take notes on Japan for sure.
Yep. We have data coming out the rest of the day today. Make sure everyone checks out in chat. Shai will be putting that and down in the main bar you see below us what the major headlines are. I expect data to be market moving today, even though if it's, again, I don't necessarily know that it's super important data, Shai, but I do think that the market now is just looking for reasons to move. Volatility's back.
Exactly.
And so
100%.
we will be keeping an eye on that. And, of course, any headlines that arise, you'll let us know.
Of course. I'll be in the chat.
All right, Shai. Thank you so much.
Thanks.
All right, everybody. Next up, the one and only Pharm. And if he's wearing red, well, here we go. What is this? This is recorded, right? What's up, man?
Just howdy, Deli. We're just mixing it up for you a little bit this morning.
Perfect. Yeah. I mean, this is totally throwing me off, but I'm okay. Look I'm here. I'm with you. I mean, I'm not distracted by that hat. I don't even know what to say about it. I don't know where to begin. But I mean, let's go into, I really would love to see your commentary following Peter, and I'd love to see you talk about Japan with that hat on. I mean, that's, I think, where we go.
Right. Yeah. Japan's interesting. And, global yields kind of tend to all run together, right? And there's been a lot of talk about ZB, and the 30-year yield is at a technical breakout spot today. And we've talked for a couple of weeks about, how equities can continue to ignore yields to a certain point. And to me, that's generally a technical breakout. And we're sort of sitting there right now. Now that breakout could fail and reverse back down hard. But to me, like it's all somewhat aligned. Japan losing their long end, we're losing our long end. It's definitely not a good thing. And I'm not really seeing any likely support on ZB until like -30, when traders refuse to take physical delivery of ZB contracts, and you just have ocean barges just filling the ports, holding ZB contracts in barrels, and then it probably reverses.
Yeah. I for like a very short moment, I felt like I was on an episode of Landmen with Billy Bob. I mean, I'm getting those vibes. I don't know what it is. I mean, we're gonna have to look at oil too. I can't wait to see you do commentary with oil as well today. But yeah, ZB. Here's the thing, Pharm. You and I talk about this. I gotta tell you, it's one of those things where you come in every day, you and I have been talking about bonds, a lot of people, and it just does nothing, right? It has no impact on the market, and you're just like, okay, it doesn't matter, and you kind of move on, right? And you get this auction that sparks it, and now it's back to front and center, and it's just a reminder for myself, for everybody out there, the market doesn't care about something until it does, and it attaches and detaches from things at times where sometimes it doesn't make sense, and sometimes it makes all the sense in the world. And we're back to a situation where it makes sense why they're attaching themselves to bonds. We have to be aware of it, and also have to be cognizant of at some point, if equities do get detached from it and the bond market slows again, that does happen. We're not there right now, so let's focus on where we are. But 110 handle in bonds, DCP, PAX, myself, we all talked about it. I talked about this level back down here at 109.17. I think that's where we're headed. I wish I was in this short. I'm not, but I look at it and go, again, I think the good news is that this is what's sparking opportunity across the board. Watch for 109.17, everybody. That's my support. That's that old Bollinger Band peak. I look at that as key supports. What I always look for is, why do Bollinger Bands matter so much for me? If you look at what happened on this move, and this is a 20-period 3 standard deviation Bollinger Band, what happens is when this move was going down, this Bollinger Band from a 3 standard deviation got to 109.17. A 3 standard deviation move in bonds does not happen often. The Bollinger Bands at that point was saying this is what a 3 standard deviation move would be from a 20 period moving average. So that's a pretty substantial move. So when the market started to consolidate in the bonds and that those Bollinger Bands started to come back inward, when it starts expanding back outward, I consider this unfinished business. This is where, like, if this move is extreme, this is where we head, because that would be a 3 standard deviation move. So it's just a continuation of this move. It was a rotation, and now we're back to it. But what's interesting now is that the bottom Bollinger Band is now expanding outside of that, which is typically a clear indication to me that we are going to 109.17. That's a full point lower, basically, from where we are right now. And ultimately, what does that do for indexes? Boy, it's going to be interesting to see, because I don't think that we're more than a day away from that potentially happening. And that is still with the velocity that I've been talking about, that I think that this market could needs to pay attention to. And you're seeing it in S&P. So I'm going to go to S&P next. Obviously, yesterday's move was the first substantial down move we've really had. It's the most substantial down move we've had going back to the end of April. I mean, this last candle here was probably the only one that's comparable. The rest have been green with a splash of small minor red candles. So volatility is definitely back. What I think is going to be difficult for equities to work through here, and again, yesterday I talked at 58.40 to 58.60. I'm going to rely more on you on intraday levels, because I don't have a ton here. But when I see moving averages and Bollinger Bands like this, my thought process is that this area right here into this gap, I mean, this is basically where I see us spending a good amount of time in volatility. And ultimately, that still keeps me relatively bullish. Probably just below 5,700 up to the recent highs. I look at this area, we got a gap back here. I think this is the range of volatility, and it doesn't derail the fact that the market's still bullish. Again, I'm coming at everybody, giving everybody a perspective of medium to longer term time frame, because that's more of what I trade. And so I look at it and go, still nothing really for me to do in here, but I do expect us to start testing these lower areas based upon what I'm seeing in the bond market. Because the bond market is accelerating at the pace that it is, and equities are kind of in limbo, they're going to get attracted to areas of support, and I don't necessarily see anything quite right here. I talked about 58.40 to 58.60. That was this old low. I had some VWAPs that were also pinned to there. I look at this and go, I think it's kind of, a short-term area to hold. We'll see. Like I said, I'll rely more on you, Pharm. But for this morning, for me, that's the story between bonds and equities. The last thing I want to go to, when we look at the gold market, you wonder if that's going to start getting more interest sparked. It's back above all the moving averages. It's back above the anchored VWAP for the high of the year. It would be if you're trading gold, watch this area today. Very important. I've been watching it all morning, and I'm sitting here going, at some point, am I going to look to start getting long gold soon? Because the stop is relatively tight. Today's low is a good low to lean on. Today's low is 32.82. The VWAP comes in roughly at 32, or 33.04, and that's the VWAP from the high. The 21-day is 32.90. We're right at and just above those areas. If I start to see gold firming up, it's to me, we start heading to 1 and 2 standard deviations higher again. 33.75, potentially up to 34.43. I think that starts to happen. I'm very interested in gold longs today, and I'll talk about platinum as well. Platinum continues to rotate higher, and I just don't see this thing stopping. I've had a position on a platinum for a couple days now. 111.13, 111.15 area. I've seen no reason to stop. I'm not long in the best spot, but as long as this low holds right here, I'm pretty much trying to hold it. This low is 10.47. I'm long from 10.50. Hard market to hold, I got to tell you. I've not traded platinum in the past. It's a slippery sucker, man. I just keep it my stop, and if it starts to move up in here, I'll trail it. But I think 11.15 is coming in the coming days, and so that's what I see. It's getting a touch overbought on the RSI, which I actually think is bullish. And the reason why I say that is because people chase metals markets, they chase oil markets when there's supply-demand issues. When markets get overbought, they tend to run much further than you think. And the fact that also platinum is outperforming gold tells me buy the dips in platinum. I mean, these are my strongest plays right now. It's not equities. I gave the color on what I'm seeing with equities, but I like metals, man. I think metals are going up. That's what I've got for today. Let's see what you've got, Pharm.
Yeah, well, with respect to platinum, I was a little bit annoyed that I missed that move in platinum and palladium. So I did what every great trader does and eat a giant loss on a different metal that you decide to chase in sympathy. So that's how we do it, right? So copper, it wasn't a big loss, but that sucker, kind of trades like crude a little bit in a way, just kind of wild and stupid at times. And so I ate a couple of stops on that, trying to get in there. Just, again, based on the inflation narrative. And that's what I found interesting today. It's a lot of this has been, okay, we're going inflation 2.0, bonds are going to zero. I have to buy all hard assets. And, I woke up this morning, it's crude's down and copper's down. And there wasn't really a whole lot that was firmly bid this morning. And so I found that interesting. So I don't know, we'll see how that plays into today. But yeah, I agree on the index, right? We've talked about this for some time. We haven't had any kind of a proper daily high or low in quite some time. Oh, and by the way, I got those VWAP bands on there for the Trump buy stocks, and you can see we're sitting right at the second one here.
That's right.
Yeah, so I did do my homework.
The hat totally derailed me today. I got to tell you, It's I didn't even know whatever plan I had. It was gone. It was thrown out the window. So now I'm just I'm on the fly right now.
I got you good. So I'm feeling cozy about that today. So they haven't proven themselves yet. The VWAP hasn't. You had the first one here. It hasn't, kind of wasn't really reactive necessarily. I guess it kind of was down here. The +2 band on that one seems like it was reasonably relevant. I think you had that on your chart or something similar anyway. And the second one, this is really, probably the first real test, yesterday's low and today. So it'll be interesting to see if it holds. What I do with indicators, right? Everybody uses different indicators. I don't have one or two, other than volume profile, I don't have one or two moving averages or anything like that I always use on my chart. The indicator that I use is that which has proven itself to be relevant to that instrument at the time, right? So it doesn't matter if it's the 21 EMA and an individual equity is riding the daily 21 EMA, or maybe it's a VWAP or what have you. I want them to prove that they're relevant, and I want to see reactions there. So with VWAPs, I'll put them all over the place, whether it's a week or a month or a swing low or a swing high. But if they don't prove to me that they're relevant, I just take them off, right? I don't want slop all over my chart. So that's what I'll do with something like this. And it was kind of a curiosity yesterday. And so we'll see if it holds. And, but the point at which you get 2-3 solid touches, then it's reasonable to me to keep on the chart. But I want to cover that in my impressions on indicators. But you're right. We're still we have this bull gap. And so these are all hours candles. But on a cash hours basis, we had 58.05. And 3/4 was last week's cash hours low. So anything below that is the bull gap. So, consolidation above there is neutral, right? It's at least neutral. So we could just continue this sideways consolidation. We could build this out. Like I mentioned yesterday, it could be a 3-week range sitting above this bull gap before we ultimately make a decision. And that would be somewhat reasonable. We could come down and we could actually dip into the bull gap. We our overnight lows in the 58.20s, 58.28 maybe. So we didn't quite even make it there. So, you can't be super bearish after one big red day. I will say that we finally broke some structure on a 30-minute chart by taking out a prior, swing low. We've obviously, this is really the first time we've had a proper potential downtrend on a 30 or a 60-minute chart. And so that gives us an opportunity to find a proper daily high or low. And you can see futures are ripping off the lows, big time here. So that's interesting to see. But yeah, it's not one big red day doesn't, destroy a market. The reaction was to the auction, but, I posted a supplemental video yesterday. And what happened is, we came down and the overnight low was at last week's volume point of control. And then we rallied up during the day, and the Qs hit top of range, swept the two, local highs, and reversed. And ES tagged last week's value area high, and it also had yesterday's volume point of control sitting right up at the high a day. Like there was already distribution occurring before the auction. And so we can say it was the auction, but to me, it was really quite technical that we tagged last week's value area high. We already had distribution with an intraday VPOC shifting up into the highs, and then the auction came and nuked it down. So there's always a narrative. Just like bonds don't matter until they do. I mean, what do you know? They start to matter like after we get through OPEX and expiration. I mean, probably not a coincidence there. So I mean, today's going to be an important day, but I mean, this could just end up being 2-3 week consolidation in this range. Sellers definitely have the ball. I would say this prior area of consolidation is pretty obvious to need to reclaim. That we spent like all night doing absolutely nothing. I'm sure, of course, I was looking to trade it here, and there was absolutely nothing to do. So that's going to be a key reclaim. And then, right, I mean, this is usually how it is. You stay up, you're like, oh, I'm going to pick off a trade today, and then nothing's really happening. But yeah, to me, like above the bull gap, this can be just neutral consolidation. I will say we talked yesterday about having supply overhead and how that matters. And so if we can't kind of reclaim, I'm going to say like 50, 58, 90, if you just want to make it simple, then you now have 2 weeks of trapped inventory overhead, and that's problematic. So that's kind of a big picture view for me. Above the bull gap is okay, but you're going to have to start reclaiming some of these areas of potential supply. Otherwise, they're going to have to make a decision and consider peaking their positions.
Well, let's go into the shorter term today, Pharm. I mean, this is what is so difficult in this area. Because I've zoomed out my trading a little bit, it's so difficult. I look at this area and go, man, where am I really wrong, long or short here? It's still a ways away. We're just in like this limbo, and we are attached to the bond market like we've talked about. But for day traders, again, I think this is a great day trader market. If you're super short term and your strategy is built on like, from the open to the close, and it's really, all about that day trading, which most people in here probably are. I think you're going to be hitting a lot of prices. I think volatility is back. We're in a range where I said, again, there's not a lot of key stuff that I see, but walk us through this morning. First, little rally up. What would we look for resistance? First little dip down. What would we look for support?
Yeah, I mean, I do think today could be tricky. I think it was Tuesday I mentioned it was a good day to get chopped up, and it was really choppy. And I think today could potentially be tricky as well. We've got an overnight low with a strong bid coming in, but I mean, your first order of business is going to be recapturing this range. And like, if you want to just make it simple, call it like 63. Reclaiming and basing above 63 can find rotations towards the overnight high. I didn't add a daily level, but I've got like 76 to 79, which was the overnight high. On ES, I would really strongly encourage everybody to be looking at NQ, even if they're trading ES. And I think everything is all about NQ 243 to 251. That was something we mentioned coming in on Monday. NQ potentially breaking away from the 240s to the downside was problematic. And that's the overnight high on NQ. So I think, ES can remain under some pressure, especially while NQ is below 240s. If NQ can reclaim 240s, then ES can gain some strength. And we are seeing quite an insane bid here if you look at the 30. So this is interesting, really. And I'll have to look things over a little bit more closely, but this is quite the 30-minute candle. So 58 to 58.63 half is the spot that I was using. But, if we can base over 63s, we can rotate up here to 76 to 79. The spot on ES anyways, on a weekly time frame, if you're going to defend, if you're a seller, you've got, just call it 58.90 would be one spot. And then we had single prints yesterday that remain open. And I want to say that was 59.07 and a half to 13 and a quarter. But I feel like you probably need 59.20 to really feel a little bit cozier. But this is where it gets tricky, right? Like maybe we rally in here, we take out the overnight high, everything looks amazing. And then strong selling just comes in and just, nukes this thing back down. So I think I would be prepared at least to flip a bias quickly. I don't have a bias today. I think it's a good day to get wrecked. Sticking to one bias too easily. So anytime I feel like that's the case, I'm probably waiting for the initial balance to set the first 60-minute range and then picking off a trade at a good location. That's just something that I do when I get sort of a sense that things could be a little bit wonky today. And that's kind of where I'm at, especially with this bid coming in off the lows.
Yeah, I'm looking at the bid come in on the 30-year, and obviously, again, we talked about this. They're attached to 30s right now. My stuff on the shorter term stuff that I look at, 110.23 is big for 30s. If it gets above there, I could see it going back up to 111.13. Wouldn't that be spicy? Up above 111.13 to 111.21 is where I would look to start to get short bonds. I almost didn't think I was going to get a chance to sell a rally, and maybe we do. I mean, it's still a ways away. It's a full point where I would be able to come in and manage some risk short because I'd be a seller up to 112.02, stops just above there. But to me, again, the bond market is dictating the action. And then if you're just looking at the indexes and you're saying, hey, hell with that, I don't care what anybody says, I'm not looking at bonds. You're right. Keep an eye on the NASDAQ because it's going to be the leader. And it's going to be the NASDAQ is going to be less in tune with the bonds. So for the equity index traders, the NASDAQ is going to be the one that's leading the tape. If all of a sudden the NASDAQ wants to catch a bid, I don't care what the bonds are doing, it could probably pull the S&P back up, especially when it's up. Because like we say, everyone looks to buy this market. I mean, it's just what it is. And technically, as you and I both discussed, on the medium to longer term time frame, still modestly bullish, and just a rotation for now. And so going to be sloppy in here. Again, really good, I think, for short-term traders. Stay patient, stay for your areas, and when they get there, watch the reactions and execute accordingly. 3.5 minutes left with you, Pharm. Maybe you take us into a little bit tighter of what you're seeing. I know you said NASDAQ. What were those prices in NASDAQ you were looking at, like 220? What was those?
243. Yeah, so I've got the NASDAQ up. I pulled it up real quick, and you can see if you just, you look at this overnight high up here, and sorry, scroll left. So if you see this overnight high, which was 243 basically, and you look all the way left to last week's profile, you're going to see that's the bottom basically of the meat of last week's volume profile. So that's where all the inventory is effectively and potentially trapped. And so driving away from that is potentially problematic for longs. Above there, and then you would be trading above an overnight high, which would be quite bullish to open and then trade above an overnight high. And, now all of, these sellers from, overnight are trapped and buyers are sort of back on sides. You do still have some inventory, overhead from this week, but it at least gets, the trailing week last week untrapped. The other thing I'm going to say is that if you look at the overnight low on Sunday night into Monday, on NQ, and it was right around like 112-ish or so, right? Sellers have had some serious difficulty breaking away from there, right? So, I mean, they tried it here, got sucked back in, tried it here, now we've been sucked back in. And so this attempt at range expansion from sellers has been a bit of a flop. Now, if you look at ES, I mean, ES is a little bit of a different story. It is still trading below, so that Sunday overnight low. I mean, it's kind of way up here, right? So that means there's just like a little bit of conflict and that's sort of what sets me off to suggest that like maybe this will be a little bit awkward, especially if you're an ES trader. The fact that, NQ has remained, I would say, more resilient on dips. But then at the same time, if you look back, I mean, ES made higher highs on the way up and NQ really didn't. I mean, NQ was basically just a big box trade. And it looked above that box and failed yesterday. So a little bit of conflict there, but the Sunday night overnight low on NQ and then 240, 250 to make it easy, I think can potentially open up some strength. And again, that would be above the overnight high on NQ. So that would definitely be worth noting, right? That would be quite the effort. I do find it interesting that bonds are bidding here. It was so weird that crude was down. Again, if the narrative is like inflation 2.0, buy all hard assets, buy commodities, like why were commodities red this morning while bonds were getting nuke? I just didn't really see where the money was going. And so I do find it interesting that ZB is seeing a decent reversal here. So maybe something's afoot. I suspect my thesis, and I actually have been nibbling on TLT very carefully, planning to do so in a wide range, because my thesis has been, either rates are going to stay high and something's going to break, and then rates are going to, so rates are going to be the cure. High rates are going to be the cure for high rates, basically, right? Something's going to break, and then, we get a recession, and then yields come down, or there's going to be some kind of an intervention. And I don't want to be that guy, but just the way that the tape flipped on bonds and the index here feels like something's afoot.
No doubt. I'm looking at it across the board, and it's just a stiff bid across the board. It's you're seeing it come in. Nasdaq is now up on the day. You're seeing, Russell's the weakest still, but for the most part, it's just coming in all steadily. I don't see any news. I messaged Shy to see if there was anything. There's nothing. This is coming off of jobless claims this morning. Again, I'm not surprised with the equities. And also, should we be surprised with the bonds? Look what happened the other day, Pharm. Remember that move off the lows? This is why these markets are great for day traders right now. If you have a long or short in either of these markets, obviously I'd be more heavily looking at shorts and bonds. But just trade this tape. Don't overcomplicate it. Use your short-term strategies. There's opportunities on both sides of this tape. And I think that people get too heavily, hidden biases come up too heavily in one direction or the other. We're going to keep going down. We're going to keep going up. I look at equities and go, that's why I drew that rectangle this morning, that box. That's what I see. I see a lot of up and down in this area. I don't see bulls having much of an upper hand. They have a modest one just because trend has been up so much off the lows. But you're going to have opportunities on both sides. And this bond market the other day, before we get to Tanya, it's doing a similar thing where you look at it, it kind of stops out of nowhere, at least on my stuff. Other people might have had this level, and it just comes in and they just buy it, man. And you're just like, okay, and then look what happened eventually 2 days later, because I think that was just 2 days ago. So anyway, everybody, don't overcomplicate this tape. Pharm, you're the best. Thank you for giving us insight today into NASDAQ, S&P. Totally throwing me off with the cowboy hat. I don't know what to think of the rest of the day. I think what would be really crazy is if I wore a cowboy hat next week. We all know that's not going to happen, but I wouldn't wear a hat, but that's a whole nother topic for discussion. But you're the best. So much fun. I know that it's a 4-day weekend for us. Monday is Memorial Day. Hopefully you're getting out to do some stuff with the fam.
Definitely.
Yeah, so I wish you nothing but a great trading day and a wonderful Memorial Day weekend, my brother.
I appreciate you. We'll see you in a few days.
See ya. All right, everybody. We've got Tanya in the house. Tanya, good morning.
Good morning, Anthony. How are you doing today?
I'm doing great. What happened with you yesterday? I didn't check out your stream. It was a quiet morning and a crazy afternoon. What shook out for you?
We actually talked about it at the end of my segment that I wasn't even looking to really trade yesterday, and I didn't go on my stream. I'll be streaming today, but yesterday, no, I didn't take anything. I was out in the afternoon running other errands. Had like a meeting opened up a new bank account somewhere, and I don't know, just ended up getting busy. And I'm pretty happy because I kind of just I said I'd rather let the market make that first energetic move, and then I'll assess from there. So that's sort of what happened yesterday. Super interesting. But before we get into that, I do have a question for you though. Why the red shirt today? Are you bearish?
You know what's so funny? I woke up this morning, and you know how you look in your closet and you're kind of like, what am I feeling today? And the red was just calling me. I saw it sitting up there in the middle top right of my closet. I said, I'm wearing the red today. So for the Bears, I wore it just for you. There's no meaning tied to it, but yeah, I had that feeling, and who knows? We will see how it pans out. If the Delhi red means something on how we close today, we'll have to see how that goes. We're gonna have to pull stats on that. But yeah, no direct meaning. Just it was calling to me.
We need the Delhi shirt indicator next. So we can
Yeah,
get
no
into
doubt.
your...
Yeah, let's get into what the structure is for today.
Yeah, I think it's super interesting yesterday that I was pretty much talking about how with the lack of that 4-hour FEG getting inverted made me say like, oh, it's not really good for the bulls here, and I'm slightly bearish there, and I think that we'd go for this low in ES because NQ took that out. ES didn't, and like that would be my target for ES, and for NQ would just be this low because that's a low with a FEG below it. And super I said during the analysis yesterday saying like, I think we'll get there, but I don't know how we'll get there. I don't think it'll be a clean way, simply because the way down had already been really kind of like slow and no large moves to the downside. So it's really funny to me seeing this huge wick on Nasdaq on the 4-hour. It almost took out that previous day high. It didn't, paused right there. ES, the weaker sister there, did not retrace nearly as much. And then we dropped like a rock in the afternoon. I wasn't around for that, but I thought that was kind of crazy. I did watch, I caught some of Kane's stream yesterday. It was super funny to me. I think there are a few moments that we need to like make a GIF out of, because his reactions are just so funny when his trading tool suggested that he take 6 minis or 30 minis instead of 1. That was like primetime TV right there. I loved
That
it.
was
Pure
funny.
comedy.
I saw that.
So here on the 4-hour, okay, so here on the 4-hour, we did reach my target for the downside yesterday afternoon. And then the thing that's kind of curious though, right? This was my target for NQ. Yes, here. NQ kind of holding things up a bit better. Definitely, with that retracement being so deep there. And then also I'm looking at this this humongous FEG here. We just retraced down into the lower one. And while ES is actually fell through that. But what's interesting here is like we wicked it. Now we're back up into the range again. So I'm not particularly bearish. I do wonder what the chat is thinking on that. Did we take a
Let's
poll?
take a look. Let's see, where is that? I know that it was in there earlier. I'll get it for you. I'm trying to see where it is right now.
We need the chat indicator up. Let's see here.
Yeah, NinjaTrader team, help us with the poll. For some reason, I can't find it in there right now.
Okay, we'll give it time. We'll give it time.
It's 54% bullish or bearish. Yeah, got it. So 54% bearish, 30-something% bullish.
Okay. That makes sense. 54% bearish. Okay. Yeah, so if I was shorting, I'd definitely be shorting ES today. I would go for this low. It could potentially get there. Like if we're looking at today, we're opening up kind of flat just yesterday because we ended near that end of the leg yesterday here. So we're actually not gapping down much actually, so it's just cool. Yeah, we're actually just positive 0.27% on the Nasdaq and pretty flat on ES. So I actually like that. I'll probably go for this low on ES if I'm bearish and shorting. Keeping in mind that there's a potential for us to retrace into whole 50% of this leg. And I do actually like that there's a 4-hour bearish FEG here that developed in ES. I think that's a super important area for me. If we end up retracing there, then I'd look for a shift to go short. But if this gets disrespected kind of like here, then I'd go for this wick high later on. So that's pretty simple in that regard. But NQ, if I think that NQ really gets legs here in the morning and disrespects this, like closes above the overnight high, it's kind of like yesterday's open, then I would probably go for like midpoint of this wick or something like that. I'd want to see how we open today. Is it going to be a a sharp move to the upside, then a sharp reversal. We're going to finally get some speed. That would be ideal. That would be ideal. Like, I want to get some larger ranges. Yesterday when I was looking at the ATR, I just want to make sure that I explained that a little bit more for people when I had that ATR up. I personally use the last 5 days for that because I'm a day trader and I'm doing intraday trading. Some people like to do the last 14 days. I like to do the last 5 personally. So here it would say time period 5. And then I look on the daily. Just because some people said they had different numbers than me because they were probably looking at the last 14 days. So that's why I like to just take the last 5 recent days because that could be totally different than last week's. And I don't really want the week before's data and accounted into it, just how quickly things have been changing. So we're starting to see it starting to curve up a little bit. So it's somewhat somewhat looking better here. Now we're having about almost 400, about 390. Yesterday was like 350, the average true range, which just means the average range of points that NQ moves in on a daily basis. And yeah, it could start peaking up soon. It would be ideal if so. I thrive in volatility. So then I'll keep an eye on that over the next couple of days. But going into Memorial Day, I think that's kind of something I'm keeping in the back of my mind. Especially maybe tomorrow might be more quiet if we're going into a holiday weekend, or maybe there's people that don't want to hold into a holiday weekend and maybe we start seeing some more downside movement. It's either can happen. So we'll see here. So I'm slightly bearish today. Let's see here. Let me just remove that ATR. Ideally, I'd want to look for shorts here in ES. And then we'll see here on the 15-minute.
What prices are those?
Yeah, that's what I was going to say next. In ES, I'd probably look at I'd probably look for shorts between 58.92 and 59.05. Just about. So then here, yeah, it's an interesting looking V-shaped type of recovery so far. We're not taking out these highs yet. I think it's kind of important how we take out these highs. I would prefer that in the morning we just like sharply, if I'm looking for shorts, I'd rather have a sharp move up and then back down. I thought it was super interesting yesterday. Kane was like trading on the 30-second. I haven't seen him do that. I'm gonna probably go rewatch that. But anyway, what I want to see that ES. If I'm looking for shorts, I'd want to see maybe a quick move to the upside, stopping some people out that are just trailing really tightly here, or maybe there'd be some profit taking at the open, but then I'd want to see a quick reversal. So I'd go for more downside down to here. On the 4-hour, I would go for 58.06-ish, 58.05. That being said, if we end up just at 10 a.m., I think that would be a curious 10 a.m. candle. So far, we have a very large wick there. For the 4-hour, we'll end up seeing how that ends up faring. If we're too strong of a candle, I might have to reassess. But overall, I'm slightly bearish. But if NASDAQ just, at the open gains a lot of legs and just plows through this entire, holds above like 50% of this entire green area, these green candles, if we come back and hold above 21,411, I would not want to be I would probably get rid of my bearish idea for the time being, because it could just be taking liquidity sweeps here and reversing back into the range. If we just this wick, I don't love too much, so I'll be watching. I'm slightly bearish, but also super open to the bull ideas, especially since every time NASDAQ just gives us sweeps out a little low, we end up coming back into the range or even going higher. if so, then we have relative equal highs up here in the coming days that we can just go for later on. But it could be a more quiet market with Memorial Day coming up. Kind of a bunch of different scenarios that could play out. I'm slightly bearish. But today I'm more excited because there is 9:45 red folder news. So I'm hoping that will give us the volatility, whether it's that manipulation back up into that area or if it's going to be a reversal. So I'll be really watching at 9:45 actually.
Yeah, lately, I talk with Pax pretty much every day, and the opening range has been a pretty decent trade. I mean, it's always a good trade if that's what you focus on. But I've been watching it lately to see, like, what do they do on the new session? Like yesterday, opening range was low, straight up off of it in the morning. You come in, we're seeing a lot of momentum, like right out of the gates. And then obviously later in the day when they took out that opening range low, it changed the dynamic for the day. But I'll be curious to see how we open this morning right out of the gates, leading into that 9:45 number. Do we have an opening range low or high, and then the 9:45 number accelerates it? I still think it's a two-way tape. I agree with you, like slightly bearish. Like I'd like to see them go up higher and then fail at some areas, come back into range. And that to me is probably what I would see as one of the cleaner looks that I would look at from at least my perspective for today. But like you said, the 9:45 news, we'll see what happens right out of the gates. Appreciate it as always, Tanya. Everybody hit the like button for Tanya. Monday through Thursday, she is with us. Tanya trades with her prep. Of course, she's got her own stream as well, and make sure you follow her on Twitter. Monday is your day to stream, but it is Memorial Day, so you won't be with us. So have a wonderful 4-day weekend, a wonderful Memorial Day, and I will see you back on Tuesday.
Thank you so much. Have a great weekend.
All right, everybody. It's Thursday, so what does it mean for Thursdays? Thursdays has something to do with boxes. That's right. It's trading boxes. All right, everybody. Next up, let's trade the open with Christian. My man, what's up?
Kelly, I love that shirt.
I got the red on today, and I told you, like I told Tanya, it was calling to me. I don't know why. I'm not short anything. The only position I have on is I'm long platinum, which if you've ever traded platinum before, man, that thing is like, it's hard for me to hold a position, and the thing moves. It's dicey, but that's all I've got going on, and watching the bonds and equities. What about you?
The same, the market's pretty funky right now. I do have a cough, so I apologize to the stream. You might see me go off screen to cough a bit, but it's just been dealing with this and this market. We finally got a break here, and we'll see what takes place. You want me to dive into the planning?
Yeah, let's talk about it. Yesterday we talked about this morning. I don't know how much you watched the bond market, but yesterday we had the bond auction. It sparked some volatility. I think it matters because the equities have now gotten tied to bonds. I don't think it's necessary for all of the equity traders to watch bonds. I personally think it's important. But again, to each his own, and short-term strategies, sometimes you don't need to look at anything but the short-term strategy. But ultimately, at least we have some volatility. And I'll be curious to see what your plan is for ES and NQ coming into today.
Yes, hopefully we do get some volatility picked up. We did not see a lot of it in the last week and a half. It was, deserved after the crazy April we had. But so here is the 4-hour. I'll get into this. We were in a wedge yesterday. Price attempted to break out in NQ. We saw that big push into prior week highs. ES, big divergence there, which typically is a big indicator of some sort of reversal taking place. News came out about the bonds. We had this huge reversal in NQ, failed to break out up here. ES only back tested the top of this top wedge line, and then we broke lower. At this point, we started a 4-hour, trend-wise, we started a 4-hour 9M8 downtrend. We made a second lower low into some good support here and are seeing a pre-market reversal. maybe a failed breakdown of prior day low. We still have to confirm that. For NQ, a little bit of the same. We pushed down a little bit below this 150s area, did not quite hit this sort of area of support that I have here. We put in a second lower low, failed breakdown so far below it, and attempting to reclaim right now. The big levels that I have here that I'm looking for in case we do push up are, of course, the overnight highs, which I'll go into the hourly, but I wanted to share this 300 area in NQ. That's really the main area that we have to reclaim. You can see every time we sort of interacted around here, we either bounced up or rejected lower. That's the main area, the bull bear zone line, that we need to push back up for us to say, hey, yes, sellers showed up, but we still need to reclaim this, or for buyers to really show up on a lower time frame. For ES, that is the 59 tenths. If we can reclaim that, then we can say buyers are back in control in the short term, even though we know there still are in the higher time frames. So let's go into the hourly here. We have inside that first lower low, lower high, we have a hourly wedge, which it creates that contraction and consolidations. We broke lower. We're attempting a new hourly 90-minute lower low, lower high downtrend. If we, what we need to see now is continuation lower, right? Lower low, lower high, lower. If we fail to do that, then we can confirm a hourly reversal. For this, we need to reclaim not only the 5860 area in ES, but also the overnight highs here, 5868, this hourly zone, 5870 area-ish, to then push up so you can have scenario 1.2, push up into that 5905, 5910 resistance I shared. If it cannot do that, then sellers might still be stepping in here into the open. We can form some acceptance down here, unable to really hold above this prior day low, and then set up a continuation lower. But we need that that contraction here, or that acceptance, in order for us to know, yes, it is weak. Yes, we are going to potentially move lower. If not, due to the potential failed breakdown, due to the larger timeframes that are still bullish, even with yesterday's pullback, there's still a chance that this is still a reversal attempt higher to test some resistance above and then reject. But for that, main area here on the hourly is 5860s. We might be in a little bit of a range from 5860s to 5840s. We'll have to wait and see how it develops. For NQ, a little bit of a clearer picture because you can see this overall range, this box, and it's attempting to break lower. We're having difficulty finding acceptance here to really confirm a break away from this area. Until we can do that, we have to think, okay, maybe chop, maybe sideways to higher. We do have, I know you guys talked about a 3-day weekend and the low markets that we can experience. Absolutely. That can look like chop or consolidation here. And maybe that is acceptance into next week. And then maybe next week we do see lower, but we have to wait around and see. Scenario one is that sort of chop consolidation. If we can find acceptance into 220s, 240s. I know you guys were talking about this before, Tanya, about that 240 area that he brought up. And if we can get above that, we push back up to that 300 area where there is strong resistance. You can sort of see this is like a bull bear line here, bullish above, bearish above, below, and we're below it, but we still now need to form acceptance here and then break lower. So it may be a little bit of back and forth here in the beginning before we can really find a direction that we can sort of participate in.
Yeah, no, I love the outlook for today. And again, it represents what I think this tape is. I mean, it's modestly bullish. It's still a potential for a two-way tape. We have to see what information we get from the open. I think this data at 9:45, although I don't think it'll be massively market moving, I think that the market is just looking for reasons to move again, which again, I think is good. We're going to have some volatility. I feel terrible for you not feeling well today, but we got Stowe coming in to back you up not too long after the open. I just want you to take care of yourself, and I'm going to be hopping off now. I wish you the best today in the trades. I hope you feel better soon, and have a wonderful Memorial Day weekend, my brother.
Likewise. All right. You guys have a good weekend over there.
See you, Chris.
All right. Take care. All right, guys. Let me get one out of the way. All right. That way it's a better start. Much better. Okay. So, hey, Brian, what's up? We are seeing a failed breakdown from prior day low. Hey, guys. Morning, morning. We're seeing a failed breakdown from prior day low. I don't have prior day low here at the moment as a indicator to show that, but I should get that soon. But it's this area right here. Maybe I can do this. So we're seeing a failed breakdown from prior day low, meaning we cannot form acceptance here and then break lower, right? To confirm that, hey, we are going to go lower. So into that low, what paradigm members of Paradigm Shift, my group, they caught this reversal along here. I was working on the plan, so I missed it. But you can see this is my typical entry model here. We have a RSI divergence into these lows. All the requirements were met. Then your entry, my typical entry would be something like the 9MA reversal, which I share here. That's my trade, which looks a little bit something like this. My entry goes above. When we reclaim that 9MA, we start a 9MA uptrend because we're technically reclaiming that last lower high, and we're starting now a higher high, higher low sequence, right? So that took place overnight, which sort of is confirming that failed breakdown, in my opinion. It took us straight up into that overnight resistance, which is that 220, 240s. I would say 220s for me, because you can see this zone here, this gray zone here at 229. And that's that overnight resistance here. You can see we're not able to get up above that. For ES, a little bit above it. No, it's still a little bit below. It's a little bit weaker. It's this 68 to 70s area up here. It did touch the lower side of that. And, ooh, I love caldo de pollo. That's the best. You know what's up. So I'm leaning a bit on the bullish side only because we are still in a uptrend, right? I don't know if you guys remember, but I've been incredibly bullish since that big failed breakdown that I shared in April. And yesterday, the last 2 days were that first, where was that first? Let me show this real quickly here. So I talk about a lot about higher high, higher low sequence. Here's the daily. Here's that big failed breakdown that I discussed here. And I was just telling everybody, hey, we're going to reverse back up if this takes place, right? If then else. We broke up higher. And you guys remember that trends move in a higher high, higher low, higher high structure. Into that second higher high, we typically find resistance. Sometimes we put in a third higher high. And then that's usually the climax top, right? And then we revert back down to start a larger consolidation. Well, we had a higher high, higher low, second higher high, and we're ending. We're not producing a new high. We needed to produce a new high. We're ending. So that means that we're going to start a larger time frame consolidation chop. So that means it's going to be a little bit of complex trading. It means that we can benefit from both shorts and buys, like this buy into prior day low, now pushed into overnight resistance. It rejected. It's pushing a little bit lower. So we might have a little bit of chop in the open, maybe as we wait for those 9:45 news. Yeah, Don, you're right. Thank you. The easiest part of the live stream is to hit the like button. Let's get those likes up, guys. Hey, Striker from Colombia, huh? All right, so let's see how the open looks. Let's go ahead and this might be the range that we're looking at, just because we're reversing, we moved down into prior day low, we're reversing back up into overnight resistance. So can we maybe do some mean reversion inside of this and then set up a move higher away from this or lower below this, right? Let's see how the open goes here. We have a minute. See how the spies and Qs look. Yes, weaker than in Q, that's for sure. So let me show the 15-minute here to show the kind of area that we're in now, because it is sort of in a range here. Okay, so we moved lower. We had a failed breakdown right here, and we bounced. And guess where we're back? We're back in that overnight consolidation. So we might experience some chops, some sideways inside this range here that we have in NQ from 150s over to 220s, let's say. So from my approach, I need to be a little bit patient in chop in range, as you guys may already know. And then maybe we can set up some acceptance into these highs and then break out higher. We shall see though. Okay, let me move this back up. And let's see how the morning sets up. What are you guys looking at for trades here? Chris, that was before the news. Would you have taken that? Yeah, what time was that at? Yeah, 5:25. It was actually something that I was looking for. Morning, morning. So good open so far. All right, we're pushing up again into that resistance. I would like to see some form of acceptance up here in order to possibly get a push up into the 300s area. That's that main sort of bull bear zone for me. I'm not too eager here at the open just because we've, like I said, if I go to the 5-minute here, actually, let me do the 15-minute. We're pretty much in this sort of range here. So this to me highlights high probability of a chop. And what I need to do is be patient in order to find a directional move away from here. So you can see we tested resistance and pushed back down. So let's see if we can hold this 150s area. I'm going to remove this. getting rejected at resistance. All right, we're pushing back down to prior day low now to see if we can hold. That was a good test of resistance back here. I said that 220s area, which is not unable to break above. So ES is already at prior day low. If it can form acceptance down here, then we have a better idea that price does want to make new lows. But I'm sort of treating this as a range. All right, so back up. So again, this is that sort of range chop area that I highlighted, and it's good for me to be patient a bit here. Let's see, you guys in something already? 252 level. Where's 252? What is that? Is that London's high? A little bit under London's high. As long as you hit those likes, Colin, all right? We don't need to beg for them. But you're supporting the network, so we do want to encourage everybody to like it up and expand, the network's reach to reach other traders who may need help. Right? That's all we're doing here. We're showing analysis, contextual awareness that we all, each individual trader sees. All right, so a little bit of back and forth, really no direction here at the open. Yeah, you're right, Robert. So like I said, I'm treating this sort of range from 150s to 220s or 2150s. This sort of area here, like potential range. Just because we're back into that overnight consolidation. But shorts, let's see if we fail to hold here. Maybe something sets up for the downside. What are stocks doing? Yeah, we might be waiting for that 9:45 news. A little bit of a mixed market. Some tech names are up, some are down. Financials down. Small caps down. So ES is weaker due to the cyclicals that are much weaker than tech at the moment. Some tech is mixed. So why we're seeing, yeah, small caps are not doing much. You know what's funny? Oh, I think we call this a trap in Thursday, right? My segment is usually sideways chop. So, and we're seeing that again here at the open. Really, not much is happening. Yes, weak. So we need a combination of cyclicals bouncing and tech bouncing. We have news in 5 minutes. Let's wait for that. Yeah, every time, last Thursday, right when I was getting off, that's when we broke that range. I didn't catch the exact breakout, but I was able to participate midway when we had that consolidation, and then we broke out higher. Hopefully that doesn't happen this time. All right, we're getting a little bit of a bounce. We're still in this sort of range here. All right. Yeah, guys, not again. Trapping Thursdays. NinjaTrader Live has the most handsome traders. Deli said, I need people who are good looking like me, but not more good looking than me. Okay, just below. He says, well, I'm first, then it's Jim, and then it goes like that. I don't know how he called it, but I'm pretty sure Jim is second good looking below Deli. A little bit of chop, guys. It's a tiered handsome level. Like the most educational and the most good-looking network. So a little bit of chop, nothing new about the Thursday segment. I typically got into like education mode on these streams, and I'm glad it helps a lot of you. I get these messages after saying, good feedback from what I share. So thanks for that, guys and gals. So we have 1 minute here for news. Let's see what happens. We're sort of just contracting here in ES and NQ, sort of creating some sort of, let's see, we have 10 seconds. Let's see if this gets us out of here. So far, a nothing burger. Maybe we can start to lift out from here. I mean, Qs look really good. ES is the one that's really lagging a bit. Yeah, it's a tiny range. Leo, what's up? Nice win the other day on the challenge. I didn't want to trade just because I don't want to win. Just the kind of guy I am. How did I set up the Ichimoku cloud? It's a little bit different from an Ichimoku cloud. This is an EMA cloud. It's specifically formatted to shade the area between the 20 and the 50 EMA. All right, so we're still in this range, but NQ's looking like it wants to push out. I really like the structure here. But again, we're still in that range overnight consolidation, right? This whole overnight structure is it's one range. We do have a 2-minute wedge here that let's see if it offers an opportunity. Okay, I'll look to I'll do half size just because we're still in this range, but I really like how QQQ's looking. SPY looks like he wants knee lows. Let's see. The hourly, 3 hours back to back in one range for ES and NQ. We might break down here. We're forming a nice wedge though, guys. Can we break out higher? Yeah, we trade here all the time, Colin. You're trading a 15-point range. If you're trading that, good for you, man. Or 30-point range. You don't understand where we wait for our rules to be met, and if they're not met during our segment, we can't trade. Yeah, still a whole lot of nothing. Yes, this is pointing lower. It wants to break down. I like ES for short. And I like NQ for long. That's how you know you are in a divergent tape. Let's trade Colin's money. Colin, let's trade your money, brother. Let's see if we can break down here. We can break down. I'll look for a short in ES. But NQ's holding here perfectly. I'm looking at Qs as well. I look at that a lot. Oh. I'm gonna try. NQ's attempting here. Let's see if we can push out. I have half size here just for where we are. If we can't push out, then it's not going to be ready. It's trying. Okay, we need to get above this 220s area now. And then we do have some resistance into the 300. So now what I'm looking for, since I'm in NQ here, because it is stronger, remember, I like to participate in names that are stronger. I want to see a higher high, higher low, higher high structure to confirm a uptrend out of this 2-minute wedge. If this higher low sort of does not take place and then price maybe does something like this and then pushes lower, then I'll just take a stop because no uptrend manifested, right? No higher high, higher low structure was confirmed to lead to this breakout. So I have my entry here, right above the wedge break. My stop is, I'm going to move my stop. And then 1 point, oh, I don't like this one. So you can see this is my R tool. In between this is 1R. So I'm at 1R for the trade. 1.5 and then, no, sorry, 1.6 R is up here at 283. 2R is at that 300 zone. So I'm going to look to sell some right under 1.6 R in order to finance my risk. I could technically do that here at 1R, and maybe I am because we're taking out London's high and NQ and ES is not. Let me actually do, let me see how it reacts here. Okay, so I took half off, maybe like 1.2R, just so I could finance my risk because I still, don't want to I want to make sure that this doesn't fail. I'll take more off at 2R if we get up there. All right. Thanks, Isaac. You sold first resistance at 270s. I don't see that, but hopefully it pays. Okay, so I took half off at 1 point, gosh, I don't know, maybe at 1.2. Oh. Where is my stop? Yeah, that was like right here. Okay, so I took half off at 1.2R. Let's see, maybe 1.15, right? Something around there. But the reason for that, is because I want to finance my risk. Okay, I'm a big believer in financing our risk. If I can consistently take half off at 1.5R, again, I brought it down and I took half off at 1R only because NQ took out London's high and ES did not. So there's a divergence there. And what that can mean is that NQ flushes back down to remain in that overnight range, right? Because we have a SMT, that divergence between both those two. So I sort of made a discretionary decision based on the relationship between ES and NQ at the moment. That way, I take half off at 1R, and then if the other half gets stopped out, well, guess what? It's a scratch trade for me, right? I don't lose on it. If it continues higher, great. But if I can consistently take half off at my average 1.5 to 2R, then I am always financing my risk. And this matters to me, and it may matter to you as you trade larger size, because when you start trading with larger numbers, you really want to make sure that you have the foundation of a system in place, right? It's just money management. If you're taking a $500 trade or a $25,000 trade, what has helped me is to make sure that I can pay myself so that emotional clarity is there, right? I'm not sort of trading my emotions versus what's the market's doing. So that's why I take R multiples. All right. We're into that 1 point. Thanks, Leo. We're into that 1.6R area. We're sort of confirming that higher low structure here. We haven't really pulled back into the 9 MA, so I don't know for sure, what could happen. But I do want to take some off into the 300 zone just because I share that was resistance. The R tool, is it available for web-based NinjaTrader portal? Good question. I'm not sure. I think what you may be able to do is use the Fibonacci tool and use that as a replacement. This is something that was created for me, and I'm pretty sure it can be available for you guys. By the way, these zones are the indicator zones that I'm working on, TB zones. So these are automatic. They also change color automatically, but we're still working through a few things because, this should be green instead of red. But It's there. I do already have the zones for trading view, which is fantastic. Question, if you miss a move like that because you stepped out to go to the restroom, how do you approach once a move has started? Well, that's really going to depend on your strategy. So I'll give you some examples. If I stepped out of the office to go to the restroom and I missed my entry, well, first of all, for me that would be unacceptable, right? Second of all, I only execute when my go-to setup is there. This is my go-to directional setup, which is a wedge contraction. We were forming acceptance above the 150s. We could not break lower. And so I was looking at all my other timeframes to confirm. We saw a failed breakdown in the morning pre-market. So typically after a failed breakdown, what you get is a move up higher and then contraction and then higher, right? So this is my go-to setup. I have rules, I have definitions for it. Like I know this wedge contraction really well in alignment with context and location, right? Location is important. So if I am missing this original breakout, I need to now wait again for my entry rules to set up, or else I can't participate in the move. I think you guys have seen me not be in moves because my entry rules may not have been met when the breakout happened. So what I then need to wait for is some sort of contraction up here again, a wedge. And then if my rules are met, then I can participate in a continuation higher. But if not, if we go straight up higher with no pullback, like we've seen some days, I technically don't have entries to be met for me to enter, right? Think of like an algorithm. If the rules aren't met for an entry, are you entering the trade? Is the algorithm entering the trade? No. So I have to approach the markets like that. All right. So we were able to get one more off. We're pushing into that 300 area. So, and ES is still weak. Weak. Not something I want to focus on. Let's see if we can push out, and then I'll look to take more off into 3R. Oh. All right, we're up 100 points. Are we up 100 points? That's crazy. Yeah, we're up 100 points. But let me go over my scenarios again. Now that I'm in this trade. So scenario one for NQ was that we could chop around in the prior consolidation, okay? So let me sort of walk you through my top to down analysis and then my execution inside that analysis. Scenario one is, hey, can we see the failed breakdown? Can we chop around for hours maybe and create this sort of scenario one? Yes. If not, what do I need to see near the top of resistance in order to participate in scenario 1.2, which is what we're seeing? Well, I need to see a sort of contraction or wedge to help us execute on a long. Well, looking back at this, you can see that NQ had a 5-minute wedge here, which was that 2-minute wedge. The breakout of that led to that push higher into scenario 1.2. So I planned my trade before the market opened today, right? In the pre-market when I was creating my plan. So my job is to just show up and execute if my entry rules are met, and they were. So that's my trade on the longs. All right, so we are up $1,000, even with half size. That's pretty good. And this is just the day trade account. I do like to put on swings. And for me, that's really where the money's made. I like to capture these 500, 800 point moves, 1 to 3 days. And you know, press when it's time. So let's get those likes up, guys, if we can. Gav to help out the network here. I swing trade futures. Okay. So that's what I mean. And believe it or not, it's the same approach. Hey, Deli, thanks. You know, planning, execution. I plan my trades when I create the plan. So the plans take me a while because I'm picturing myself wanting to take place. I'm manifesting, right? If I manifest and I visualize, just kidding. I visualize what price action needs to do in order for my rules to be met inside those scenarios. And then I show up and I show up and execute. First 2-3 hours of the day, either I make money or I don't. Over the long run, I'll make money. Thanks, Chuck. Hey, good to see you, Chuck. I'll make money. And then I'll create the life I want, right? That's what we're all doing it here to create the life we want. Any questions here? Do I do swing trades? Yes, I swing trade stocks as well. That's my background. Let me actually let me actually do one here. Also one here. I'll put 450s as the next target. And then if we can push up higher, I'll move my stop to break even. Yeah, swing trading. Did you mean something else? Yeah, swing trading. What are we talking about here? I don't even know you like that. That's funny. All right. Robert, finally, man, finally, I can show my skills. I'm not just somebody with good hair, right? I'm not. I know how to click buy and sell. These TB indicators are my zones. This is an indicator that I've been working on with Ninja. Still going through final tweaks, but almost there. I'm glad I showed up. I need to be here when we have a trend day, possibly. My last 3 sessions have been chop and range. Let's see. You are so disciplined. I envy you in a good way. I will change inspired on what I see on your behavior. Look, the main thing that helped me, I won't go into my background as to what helped me become disciplined, but once you create a library of these entry setups, right? This entry model with the entry, the stop, the location, okay, what you need to see, acceptance for me. And you have a library, hundreds of these to help you understand the different variations of these. How does it look when it breaks out? How does it look when it fails? How does it look when it breaks out and moves sideways, right? All these variations. And you understand that entry model so well. And then you track the performance, you make adjustments, and you say, okay, can I make 10 R a month from this? Can I make 20 R a month from this? What does R mean? If you're risking $500 a trade, if you make 20 R, what is that? Somebody do the math for me. That's $10,000. So if over time you see that you can make $10,000 a month trading this entry setup that you have, of course you're going to still want to make these other trades, but now I know what my potential could be, right? And then if I execute really well, then got it. And if I'm execute really well, then that R multiple can be bigger. Okay, so I want to wait for those entry rules to come so I can just execute on those rules, right? So patience is me waiting for those entry rules to be met because I know what outcome that can create for me. And then if it cannot, then maybe those rules don't work for me, right? Maybe I need to work on different rules. Let me go over some of those questions here while we wait to see. Look, we're stalling into that 300 resistance. ES, not even able to get up to that 58.93 zone, which I shared was that first area of resistance. So it's still a bit weak. Let me see what the larger timeframes are doing. Yeah, ES is so weak compared to NQ. So I'm gonna take one more off here. I'm gonna move my stop to break even. So I've locked in probably 80% of my trade, 85. I have a stop on the last contract here. What is this doing down here? Weird. I have a stop at break even on the rest, on my runners, only because we moved up into that resistance area. And look, if we can't get above that, there's no reason for me to stay in this, right? So, sorry, I missed some questions. Do I mentor? Yes, I have a private group where I share a big educational library. You can reach out on X or Twitter and message me, and I can tell you more about it. It's private, it's small. I'm not that type of person who's looking to have 5,000 people in there. We're a family, we're a small community of people who are serious and they really want to learn. And I like that. I'm a relationship person. I like building relationships. I think That's what makes us human. What's the G line, Leo? I mean, I'm interested in that now. Hey, Michael, thanks so much. Michael's part of the group. Thanks so much for sharing your thoughts. We're tracing a bit. Do you consider adding here? No, because I still see this as a mean reversion tape. If we don't have any left side resistance and we're sort of moving up higher in an uptrend, I can consider adding. But I need, again, for my ad, I need my entry rules to come, right? Oh, it's a Sunday open price. What is it? Let me see. Oh, I see it. How important is that for your trading, Leo? What do you say? Does it control like oh, I can see how I can. So are you seeing something like bullish above, bearish below sort of thing for that Sunday open? Yeah, we hit it and we're rejecting right there. It's funny how a lot of these sort of strong pivots or lines are in alignment with the zones that I have. And guys, that's for a specific reason, okay? These zones are carefully curated. Yeah, I see that Sunday open, Leo. Nice rejection there. So I take it you're probably looking at a reversal there, huh? You probably got short. Colin, I know a extremely profitable fib trader. Okay. So fibs work. I know his system. What if you're not on X? Is there another way to reach out? You can email me, Christian@paradigmshifttrading.com. Good morning. I admire your trading session, but I have one question. Why do you allow the trade to bounce back so much instead of taking profit? Bishop, why do I allow the trade to bounce back so much instead of taking profit? Well, I did take profits at certain R multiples. My exit parameter of my approach is to take partials at certain R multiples to finance my risk. And then part of my strategy is to let those runners run in case we can continue higher later in the day, only if it makes sense. So I've programmed my runners within my strategy to do that. So I'm okay if a price comes back down all the way to my entry, because the way I trade, I'm a trend follower. I look to participate in hourly trends. And if I can capture one, well, in me taking profits, I'm going to be cutting myself short of those potential gains that I can make. And sometimes those runners can make 10, 15 R. And that huge multiple will take care of a losing trade just on those runners, right? Because our range is so high compared to my risk that single runner can finance the next losing trade. So I've programmed it that way. Hopefully that answers your question, Bishop. Do I use anchored VWAPs? No. I should. I'm gonna become a trading boxes order flow. Trading order flow boxes. I'm gonna trade the boxes or the wedges that order flow creates. Good morning, Chris. I've been watching you for the past half hour. I like the part where you have a vision of where you wait for the setup, then you take action. Yes. I need to execute consistently on the I need to execute consistently on my entry rules and my setup or model, whatever you want to call it, right? That is my edge. It's waiting for that, being disciplined for that. I feel like with order flow, you can look at the insides of the market, right? Like you're looking inside of it. So I'm just wondering, yeah, I let my trade come to me. You have to, in my opinion. I'm wondering if I can take a look inside the market while trading my setups, and that can give me additional conviction, right? Especially for like sizing. For me, I'm big on really sizing up a plus opportunity, and just anything else that can help for that, as you can imagine. Order flow those wedges and box profits to go. You're probably in marketing. All right, so this is gonna stop me out. We hit that resistance. I had a trade idea to get short into that 300. I didn't. That's fine. I still made my money. And right now I'm only have a little bit at risk. So, I'm just thinking ahead of what the rest of the day can look like. Yes, is having trouble really breaking past this sort of range. Let me share that. Let me show the 15-minute here. So ES is still stuck here. Was not able to break out. NQ did break out, but it hit that 300 area that I talked about in my plan. Let me show that here. Oh, what happened? So scenario 1.2 was for us to break out higher in NQ. Yes, didn't really. Yes is following scenario 1 still, not really breaking out. NQ hit 300. That was my scenario 1.2 and then rejected back down. So am I going to get stopped out here? Probably. That was a really good short. So I'm, let me see. People in the group took that short. Yes. Good session though so far. All right, so it's continuing lower. It's probably going to stop me out here. That's fine. Let me remove this here. This is a beautiful rejection from the top side. So if you caught this short, fantastic job. I still need to watch my aggressiveness because I'm not trying to, I don't want to just flip back and forth. Nice, Shuhari. Got that short at the weekly open. Could also be a 15-minute and 9 MA pullback. No, we're already below that. We should have held this, the top of this EMA cloud here. We should have held this area for a 15-minute higher low pullback. So what we're doing now is back testing that consolidation. Let me show that. So here's that overnight consolidation in NQ. You can see that we're back testing it. So that was a good short if you caught that from that weekly open, that G line, like Leo says. Short there. Boom. It's good. You know, we have traders here trade opposite styles. One will capture the break out into resistance, and then somebody will short that resistance back down. Yeah, how about some likes, guys? Let's get to 316. Let's get to 400. I know we can. Let's see if we can bounce from this back test that we are doing. Like it up. Yeah, like Jim says, smash that like button. Okay, so far we're holding that back test that I shared. I think of it like this. For now. So I would say when I look at this, I'm looking at this sort of range now. Like this is the range. And then price will either ping pong inside of it. And then from here, we either can break out higher or we break down lower. Now, if we do break lower and we sort of break back below the overnight range, okay, then at that point we can traverse all the way back to 145, which is not that far away from this, but this sort of other side of that overnight range, right? This prior consolidation here. But that's sort of like the next sort of structure, right? Because now price is sort of ping-ponging before in between the breakout and the resistance. What can then take place here, if this can sort of hold here for a bit, this can set up the breakdown lower. So maybe I take that short. We'll see. Thanks for liking it, guys. We're moving up there. Let's see if we can get to 400. Chris, maybe you want to see it, but you can remove all that individual text in your chart by clearing out the label fields. You mean here at the top? I'll look into that. Thank you. Yeah, I probably will. It's just taking up too much real estate. Would I take a trade here for a long? Uh, I think at the moment this is probably going to push back lower. I don't have an A plus opportunity here for me to consider a long. Like the A plus opportunity for me was a consolidation wedge acceptance above this 150 zone, which you can see we broke below it, we reclaimed it, we back tested it, held, we could not break lower, right? We could not break lower, and instead we created a contraction that then broke out higher, and it aligned with my plan. It aligned with my setup. Oh, you need an indicator for that. Wow. My stop loss is at break even here. Sell stop right above my entry. I'm just in runners at this point. Yeah, I think this is gonna fail lower. I just we hit resistance. We couldn't really hold it. If we push back up, cool, but it just has that look like it wants to move lower here. But even if I wasn't in a trade, like this is not enough consolidation or acceptance for me to take a short here. I need more. All right, it looks like we're trying to bounce back up. See, that's why I say it's a little bit of a ping pong structure. But if we can't really reclaim and push above, let's say 250s, then this can reject back down. Chris, don't you think it has moved beyond 1 standard deviation and it's up after this pullback? Gosh, it's I can't. Kind of want to take short. No, I'm just gonna stay in this good morning sesh. My aggressive side wants to take short, but it wouldn't really be respecting my rules, right? So you always have to like be aware of that entainment. You're like, yeah, I made some points. I can make more, right? You get that feeling because you're up in a trade, but you have to wait for those rules. So we're attempting to push back up. You can see that we didn't really develop something here. So maybe now we can. So we can create something like this and then have a wedge here. Similar to this wedge breakout. Then at that point, we can say, hey, yeah, this is going to go lower. But ES wants lower. Look at that. There's still some strength in tech, which is creating this sort of little bit of a choppy structure. We're accepting overnight high. Let's see. It's a battle right now. It's a negotiation, like I like to call it. Buyers and sellers are negotiating. Do we hold? Do we bounce? Or do we break down? So for me, as that negotiation matures, what price does is typically creates a wedge, similar to the breakout this morning. I know it's simple, but it's the thing with simplicity and around these setups that are, many years old is that people don't actually apply a certain set of rules to them, location that can help them understand how and where these setups work. You can't just draw a wedge anywhere and think, you need rules. So yes, is definitely, we have 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, 6, 7, 8. So we have a 90-minute no trend in time, which is a continuation setup that I go over with my group. And this is just telling us that this wants to break lower. Well, it can reverse back up, but the point of this is that it's a long enough consolidation here in the 90-minute downtrend that can generate energy for a continuation lower. But it's not an A plus setup, and my aggressive side wants to take it. My rules based is but yeah, like this would be my entry here. So maybe you're taking this breakdown short. I would prefer to still see a little bit of more of a wedge contraction, but yeah, it's breaking. ES is breaking. Much weaker. What are you guys trading? Are you guys in something? So if this can really break through here, then next stop will be 58.43 for ES. That's a 10-point drop if you're in that. NQ will be coming down to 140s if it does that. I'll probably take my stop at break even and that's it. Call it a session, since I am getting off early, guys, only because of my voice is not really aligning with my hair, so they don't like that. Ellie said, listen, you gotta have good hair. Your voice has to match. So I don't make the rules. So if I would have taken this short here, my entry would be here. My entry would be the, not this one. Oh, it went away. Why did it go away? This is how my entry will look. Oh, I'm muted. I just caught that. But look, Sav said it. A good beard compensates for a lack of hair. Girl math. So you can't really argue that. A little bit of chop. Did not get the sort of wedge I wanted. Maybe we do get that here. Maybe it develops something like this. Yes, is seeing a failed breakdown of this very tiny consolidation. See, that's why it can continue lower, but I need to, my aggressive side sort of said, hey, my intuition said, yeah. All right, so we're pushing back up. Yeah, Jim, grow a beard. All right, so we're holding, guys. But maybe now we go get that wedge structure here, which is what which is then what creates an A+ setup. All right, guys. Oh, I didn't see all these. Oh, don't call it a comeback. My time's gonna come up here soon, guys. Cutting it short just because they want somebody that can sing. And obviously my voice is not up to par for that. So all right, so we might get that wedge now, and I'll let Stowe take over here. But it was a good sesh. We analyzed it well. The trade plan was created well. We understood the assignment. We understood what needed to take place to get a directional push higher or lower. And the setup or the model for me was a directional model in order to participate in a breakout. And I caught that. And so we bounced, we formed our wedge. Now we can attempt that breakdown. Now we have enough of a contraction here to really push lower. Right. But I think at that point, I'll just let this stop me out here. Stowe does a great nickelback.
Stowe does a great nickelback. No, I do not. Don't
Hey,
start
Stowe.
that rumor, Chris. Good morning, buddy. How are you?
I'm just reading the comments here, okay?
Fair enough.
How's it going?
It's going good.
Trades?
Yeah, I'm really trying to catch this long down here. It's been exhausting. I'm leaning on this LVN. They keep, breaking back above overnight high and then letting me down. I've taken maybe 1 million scratch trades down here. So the commissions are winning at the moment. But this
Wait,
bid
is that a new
so
haircut?
strong. Yes, I did. I did get a nice boy haircut.
You got the, hey, we need good hair here memo, huh?
Well, I got the I have a wife that said, "Are you sure you want to get your driver's license picture taken with that long hair?" And so she was correct. So when I went to the DMV yesterday, I was like, I should probably get rid of this hair first.
It looks great. You're killing it.
Thank you, buddy. Thank you.
Yeah, competing now. We got to catch up to Delhi. I think what we need to see now is Leo's.
That's true. I think Leo's got to be working on some sort of haircut underneath that hat. He's got it on, pretty hush hush territory. Maybe I'll try to get that out of him tonight or this afternoon when we trade together.
All right. Well, I appreciate you coming in early. Thanks so much.
Problem. Yeah, no problem, man. I hope you feel better. I hope your voice comes back. In the meantime, though, if you want to maybe practice your metal band scream, you might have a really good one right now.
Oh, really?
This might be your chance.
I'll take some lessons from you after this.
All right. Sounds good, brother.
All right, my man. You have a good sesh. All right.
All right,
you guys
thanks.
take care of everybody else.
Bye. Good morning, chat. Yeah, I don't have the volume. Yeah, I don't have the. Deli said he was going to ship me some product, and it's going to come in a box. Have to apply it vigorously, and that's what will eventually get the height is what I'm lacking right now. So, but good morning, everybody. How's everybody doing? So today's a pretty fun day. I'm trying to catch this breakout higher, but it keeps fighting with me. This is basically the story of a million longs and a million half fills and a million half stop outs right here. And we're kind of now that it's getting, further into it, we're building this profile, and I'm just trying to lean on this LVN here for continuation higher. And this bid that keeps piling in back here. I don't know. I think it's going to stop me out finally. I mean, the A plus is down here with the RTH open retest, -1 retest, other side of this LVN test also. But I like that. The thing I like about this spot so much and why I'm, trying really hard to stay long right here is, it's all these peaks. These are all these spots where sellers used to be and were rewarded. Like, look at this. So this is I'm going to ignore the rest of this trade and I'm just going to let it play out so I can kind of slowly talk about what happened this morning. First of all, this green zone here, this is our 30-second London opening range. If we go back to that, let's see if it gives us any clues for the evening. Not really. This is a pretty choppy, session. And then right here at, 7:30 in the morning, that's when we got that big sell-off down to the previous day low. Let me see where that actually is. I don't have that MGI on this chart. I'm pretty sure that was the previous day low. Yeah. So down here at 070, this spot, this is the previous day low, and this is also let me bring in the big guy. So on a high time frame chart, this is also this balance area low that we have been creating over here. And this balance area is automatically drawn by my OFL tools. And, we poked below, right back in it. So this gives me the clue that, this balance is being respected. It wants to hang out up here. It doesn't care about testing this stuff yet. We're still holding these two gaps. So I'm still a long bias on the higher time frame. And then on the medium time frame, we did reject the weekly open pretty hard. And this is also, I don't know, they're not my friend. They're kind of like my frenemy at this point. This 320 to 330 zone that has been the most annoying buyer and the most annoying seller at the same time. So, yeah. We rejected that almost to the tick up here. That's gross. It actually was to the tick. So this dude's still up here doing work. And that's annoying for longs, since, we're trying to stay long. The other thing I like about this spot is if you look so we clear trend up. I'm trying to show you the overnight and the RTH at the same time here. So bear with me while I try to frame this in the frame nicely. Big trend up here, and now we're pulling back to a spot where we had a bunch of sellers that were rewarded. Here's a big seller that was rewarded. Here's a big seller that was rewarded. Here's a big seller that was rewarded. So we're testing these 220s, all this stuff. This is what we're testing right now. So we're going to see if this is resistance turn support, or if we're going to continue lower and check this other volume node that's down here. So in the small term, I'm just trying to get in along here and then get back here and see if we can break back up into this volume, because I want to rotate back up through the balance area now that we have tested the bottom. And here's that balance area again. So now that we've tested the bottom, rejected, now we're right in the middle. Now I want to get to the other side. It's not going to be a clean path, because going through traversing value is it's an emotional journey. It's going to take a while to negotiate. So, and that's fine. We got time, but that's what I'm trying to stay long into. So this is a good example of how I try to find short, tiny term spots to position myself in for a higher time frame bias. Higher time frame being the last 3 or 5 days, give or take. So yeah, that's the story. How's everybody doing today? Good morning, DZ. Good morning. Yes, good morning, Mark. I did cut my hair. Well, I didn't. Some nice lady at the haircut place cut my hair. Hello, Con. Good morning. Did you catch that monster in the open? That's awesome, bud. Good job. It was kind of a choppy open. These Thursdays are, if I had to rank them, my least favorite day to trade, because they're usually that double news day in the morning. We had PMI at 9:45 Eastern, and then we had home sales at 10. I don't know. Either way, whenever there's those 15-minute increment news drops, it's just I don't bother even thinking about a position until after 10 on those days, because you don't. I mean, anything could happen. And it looks like, we can look at the reaction. I saw that. I watched the DOM I only had a DOM up at 9:45, and it got pretty nasty right here. You can see this silly wick. That was just a liquid nightmare to be in. Everybody got stopped right here. But then the 10 o'clock news, the new home stuff didn't seem to make much of a blip at all as far as liquidity goes. They stopped me. Okay, cool. So now we're testing the other side of that LVN. I want to watch this. This is also the, we're back in that Euro range. Love to see some exhaustion down here show itself. If this just dip down, stop these folks out, and then reclaims this, I'm back in. Because me and that 330 person, we have unfinished business. I'm just kidding. No, we don't. I don't take the market positioning personally. I'm not a superhero. Ooh. Big bunch of offer lifted right there. Let's see. Ooh. Spicy. Back down, touch the pivot. This is getting... Yeah, EH, it does look... it depends on what time frame you're looking at. I don't think that it looks bearish on the day. We're above the open. We're above the opening, the 30-second opening range. Just pulling back. I would say at the moment it's pretty neutral on the day. If we start breaking down below the open, I could maybe be convinced into some bearish vibes, but until then, I'm not gonna flip my bias. I want to see this stuff get tested. We haven't come back to the OR mid yet either, since building all that volume. All right, they're pressing, they're stepping on it pretty hard. But got to keep an eye. I'm going to keep an eye. Yeah, this so 200 lots just hopped on the offer at 176, or hopped on the bid, excuse me. They just got filled. So just watching that reaction. That spot, you can see it right here on the Delta volume profile. I see it stacking behind him. I'm going to get in. I need the offer to pull. It's not super great flow. They're pulling off a little bit. Just need that bid to chase it up. Nope. I'm testing the open again. Definitely a little squirrely. Yeah, really stepping on the offer. Yikes, that's a lot of selling. Let's see. See if this open wants to hold it. It's trying. I mean, it's trying to bid it. But that offer keeps coming. It keeps like, it's like a blanket. Big fight right here. Nice. Nice. That's cool. Where are you at, Leo? Leo, you in the chat, homie? Your trade just banged one out. There's so much business going on right now, though. That was another 160 lots on the offer that just got filled at 192. You can see that here. See these big spots? Actually, we'll put this up here. All right. Let's keep an eye. Keep an eye. Keep an eye. Get this thing up here. I really wanted to see this 170 get tested again, but it didn't. It didn't want to see itself get tested again. Up in here, we got very close, but this was a lot of nice. There we go. We got 2 off there. 50 points. Let's go. Nice job, Con. Good job. Good job. Nice job, Leo. A++, baby. That was a cool trade. I'm happy with that. So here's a good example of this is A+. I put four lots immediately on this. This stuff, I'm half size, scale, crap out, scale, crap out. That's what all this is in here. This idea is the same as this idea. It's just not as strong. It's just not as good. So when I'm looking at we can zoom back into these. When I'm trying to get into these, I see this exhaustion bubble. I get in, scale one out, get in, scale one out. But I'm aware that I'm in the middle of value here also. Because, this is VWAP. It's lost its slope. So it's flat. But These are still setups. They're just B setups. Maybe B minus for some of these, like the OR high. Maybe that's a B minus. But you don't know where price is going to bounce until it bounces, and so you can only take. You just got to take the setups that are there and size accordingly, so that you can see. Now we're stuck at overnight high again. Well, the bid's very happy though. It's quite happy. The bid loves a Thursday, I guess. Thanks, Omni. Yeah, fresh cut, baby. I mean, you can't live a whole summer with long hair. It's relentless. It's insane. I don't know how people do that. It's like wearing a winter hat all the time. But yeah, I feel good. I feel much lighter. Yeah, I'm stoked on that trade. I will look to add here, back in here at this LVN. If we pull back, so I got 2 lots off. Let me do my math. 10, and then I got 50. So we got 60 points in the bag on that. We need to. I'm still. This was a small red, net small red. This little experience in here. So, but we'll keep climbing. Oh, thank you, Nil. Thank you. You guys are too nice to me, honestly. I really, really appreciate it. Yeah, it's true, Con. We are on the same side a lot these days. That is true. That's fun. All right, let me see if I missed any questions. Okay. Okay. Inran asks, what is the role of delta in your trading decisions? So I'm just using that to I'm using that to execute for sure. And I can't, unfortunately, this delta volume profile is reset here, so I can't show you, but there was a ton of offer delta. I'm sorry. There was a ton of bid delta down here supporting this, and, exhaustion sign. This is a trade setup that we use a lot. So this is A plus because actually it might be A plus plus. I don't know. I don't know if I've ever had a setup this good. Some people ask me, why is your setup so good? And it's like, I can't, they've never seen a setup with A plus plus. I'm just kidding. So number one, this was a trend that has pulled back to the -1 standard deviation band on the RTH VWAP. That's A plus for me to begin with. Maybe it's like A. OR mid retest trade. That is an A plus. We got an exhaustion sign right here. That's A plus plus. Plus there was all of this bid delta piling in as well right here. So I want to stay, with those folks. If this buyer absorbing all of that selling is correct, then this is a good spot to get in for continuation. We also got a delta flip right here, meaning that all of this negative delta has now changed to positive delta dominance on that candle. So yeah, A plus 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 on that. That's why I was just in with 4 lots, like, let's go. And I'm still holding. Nice. I want to see this 170 guy, or I'm sorry, 270 guy get tested. This was a pretty big spot on the way down that tried to bounce right in here. And the passive seller that was there just shoved it back down and then continued to. We're also getting to the top of this this node here, so this might be running out of gas a bit. Yeah, I guess I should just take that at 68. Not be picky. Yeah. Yeah, that's what I'm going to do. Oh, all right. Any other questions? Good morning, Gino. Hello. Yeah, there is some divergence today with NQ and ES, so that's good to know. You are correct. Fly here is looking lower. Cool. Possible. Very possible. That rejection of that 330 spot, not great. Also, rejection of the weekly open, not great. Not great for longs. So, yeah, maybe in a longer time frame, this is going to continue to head lower. Totally possible. Yeah, still a big seller up here, right here. Yeah, we'll see. Morning firmament, yes. All right, A plus. I think I missed. I think I got all of the. I think I got all the questions. Jeff's long some ES. I don't necessarily have any read on ES at the moment. Ah, here's a nice spot. Missed my ad. Ah, blast. I blame the chat for that. I'm just kidding. But so here's a good example. I don't know if anybody was watching that while it was happening, like I should have been. So broke above overnight high, came back, and then a ton of bid delta came in and supported this spot right here. And then price immediately rejected off of it. So this is where I should have slapped this long in. I missed it by, a good 10 points, but we're still in with a good ad. And bid is trying to party. I'm trying to party. The bid's trying to party. Three Ball asks, what is the indicator that plotted the red dot at the bottom pivot? That is part of Delta Map. And Delta Map is the thing that that might also be the EAD. I'm not sure. It's one of the two. But I think it's Delta Map. And Delta Map is also the thing that colors these, the candles, all based on the delta dominance of that specific candle. I'd love for this 260 dude to stop selling the crap out of this. That would be so sick. Delta Map. Thank you, Leo. Thank you. Okay. Oh, thanks, Nalin. Oh, and you're a recent OFL member? That's awesome. That's so sick. I'm so happy to see people jump in there and start to learn how those tools can, work for you. And everyone in there is extremely helpful, not just the owners and the mods, but the community in general. It's a really good community that takes care of each other and helps each other a lot. So a lot of people throw that community word around a lot, and I would like maybe more than they should, but I'm prepared to say that is a really good community of real traders that share a lot of info, share a lot of setups, and help each other out a lot. I'm glad you like the stream. Joachim Wickstrom Can you go over what you look for in order flow to enter a trade? I think maybe maybe you asked that question before I mentioned this, but basically what I'm looking for in order flow is something to back up the price action that I'm seeing. So this is like, I wanted to see a retrace. I wanted to see this bounce here. I don't want to just buy this level blindly. So what I do instead of doing that is I watch for order flow, which is a combination of time and sales and, the delta volume profile and watching delta reactions. And the order flow labs tools also help me read delta with the visual representation that is part of the candles. So I'm looking for order flow to confirm the idea that I already have here, that I want this to bounce at the OR mid, at the RTH open, at the -1 standard deviation band. And then I want to see trend continuation confirmed, like right here. We see this bid delta stepping in here to support this move. So that gives me confidence to continue to hold my 3 lots here. I might add another one here too, if we can pull back and I can see a good reaction here and try to get to the top of this band and test this volume that they left up here. So yeah, so now we're back in that mix. I'm watching it. Yeah, I'm going to put another one on. The bid is very happy. The bid is quite pleased with itself right there. And then I'll take this one off up here so we can scale out. I just want to see. I got to get through the overnight high. Come on. There's a lot of business at the overnight high too. What time is it? 11:15. I mean, I can't put too much weight on the overnight high today because it's getting beat up. It's not a level that is really having it's not really having any respect from either side. Like you can see over here, it was just getting, auctioned relentlessly. So I'm going to kind of whenever a level like that, whenever a big MGI level like that acts like it doesn't exist, that's something that I note and, kind of remove it from my list for the day. Because if whoever is trading this doesn't care about the overnight high for the day, and that's usually a level that is, pretty impactful on the day, I would call that a major MGI level. Yeah, if there's not, if these folks don't care about it, then I'm gonna give it a lot less weight and pay more attention to, volume profile, delta volume profile in this spot to watch for continuation or breakdown. There's somebody doing a bunch of stuff right now, though, for sure. We'll see. All you can do is wait and see. Okay, this is the delta volume profile that comes with the order flow labs tools. Let's see if they break these folks here. Okay, broke below. You'd follow through. Nope, not yet. Oklahoma. You love so much. Okay, now we're back down in this LVN. And that's kind of where I want my, this is where I'm wrong anyways on the other side of this. So I can take that stop. I'm not going to be stoked on it, but I'm going to be annoyed. But that's part of it. It's part of the trading. Watch, watch, watch. That's very heavy. Is the bid still coming in? So I'm going to keep this very tight. I did put a fifth one on right there because this LVN is what I'm watching to hold. And I do see the bid stepping in. But I'm going to flatten very quickly if we break down below that. But yeah, the bid is just stacked up. So it's a good inflection point. And this is where it was bouncing on before. So I want to see this retested. All this bid delta that, so these are sellers that are correct now. They sold through this buyer and were able to push lower. But yeah, tons of bid coming in. Oh, geez, my stop's all the way down here. That's not right. That's another thing where you get caught up reading the chat and get caught up doing stuff. You forget to do the simple trading things. Come on, Mr. Bid. Show yourself. Be somebody. It's your day. Nope. Don't hate it. Still don't hate it. What time we got? 11:18. Okay. So the turn, 12 minutes. We just retested the European opening range here. Again. And like these spots I all still like for long continuation. These are all those previous highs that we broke out above of. All right. So we got one off. Our average is way up here now, so let's see what happens. But I like that this still respected the 30-second opening range from London. We came down, dipped, touched these lows again here, caught some bid delta. This offer delta is now offsides. Bid stepping in. Yeah. It was uncomfortable, to say the least. But my friend Froggy says sometimes the best trades are the most uncomfortable. He's probably not the only one that says that, but he's the most recent person to have said that to me. So I'm going to give him that quote. So we've got 17, 27, 37, 41. Yeah, I'm going to get one. Again, I'm ignoring the overnight high for now, as it hasn't proved to matter. So I'm just going to try to take this off the point of control. Get back down to 3 lots. Come on. Zip right through it. Yeah, there we go. Nice. Okay. Filled. Order filled, order filled, order filled. Oh, thanks, Depeche. Okay. Oh, thanks. Thanks, Soliman. I appreciate you. Who else we got here? Yeah, there are lots of trap buyers up there, Matt. Yeah, sorry. Sigh. Yeah. I was paying more attention to explaining the trade and what I was doing then. But yeah, my stop was insane. So part of the manual process of adding is I have to make sure that I'm moving that stop loss up as my average price increases, right? So I was taking these ads and explaining why I was taking them, but my stop loss was still from my original entry down here. And you'd never want to do that if you're going to add, just because you're potentially digging yourself into a giant hole if you keep that stop loss down here. Yeah, you have to keep your stop loss where your risk is set, because that's the only control you have in this game is what are you risking on this trade? You don't know what's going to happen with the next candle. A tweet could send it a million miles in either direction. The only thing you can control is your risk. So, like Sai pointed out, I should have been dragging my stop up here as my average changed. So right now my average is at 230. I have a 15-point stop loss that I like to run in general. So that's where I'm at. Now my new risk is up here. If this comes down and gets stopped out, great, fine, clean slate. Then we can look at another entry wherever. But keeping that risk in line is paramount to me, because that's what keeps me not blown up, living to trade another day. And that's the important part. Nice, DLX. Good long. Good long. Jeff asked, why 750 fall? What made you pick that number? I don't know. I just like it. I think it's what my friends were trading with a while ago, and I took a look at it. I used to be on 500, and part of being surrounded by really good traders is that you just get to try stuff that they're trying, that they felt like they liked, and see if it clicks with you. And yeah, that clicked with me. So I was like, 750. It's just the perfect, it's just the perfect balance of, it's just the right amount of wiggling I want to see in a candle, if that makes any sense. Here we are. Finally, we're testing this spot where this big this sell really pushed from is right here. This little ledge. Nice. Larry asks, Stowe, do you use OCO bracket with defined risk when you place trades? Yes, I do. I get into everything with a 15-point stop just to have that on there. And then I like to have, you can see them now up here. I like to have my targets there as well. The targets I will, discretionary. Actually, I need to do it. I will discretionarily adjust, depending on the context of the day. So I want to put this right here at the +1 standard deviation band, because this is, if we zoom out, there we go. So this is a pretty neutral VWAP band situation, right? We had back here, we had extreme trend, and then it pulled back, and then now this baby is just flat. So what I'm looking to do is, now that we have tested the bottom part of, the general VWAP area, I want to test the top part now, because this is kind of, this is our balance in here from 181 to 275. And then you can also see that idea is backed up by the fact that, like, the largest volume node is inside of it. The point of control is inside of it. So right now, I would say that we are at the top of balance. So I'm looking to trim up here. This is not necessarily a breakout situation up here. So that's where I'll discretionarily adjust those. Yeah, that's seller, huh? Right there. Again, 1, 2, 3, 4 times. 4 times that seller has got off those highs. Okay. Yeah, it might be a balanced day, London's closing here. So we'll take that with a grain of salt. And we'll see what happens. No, Jeff, I don't limit in. Only for Globex. Globex, I never market in, only limit in. RTHI, only market in, never limit in. Yes, IB stat still open. That's what I'm looking for. Right here. Because, on the day, all this volume respected, RTH open respected on a back test. So this is the 30-second opening range right in here. I mean, you can just use the RTH open print to see the 30-second opening range on most days. So yeah, if an IB is going to break today, I'm betting on the IB high. So that's why I'm up here with these 2 lots. Turn bear trap. I don't know what constitutes a trap for either of those animals. I don't know. It's been explained to me many times, but I just I just don't have the that's just not how I process market stuff. So I don't know. I've never been able to figure out what a bear trap or a bull trap was. Usually when I'm hearing those words, it's someone talking about their own book from their own trading point of view. Like if somebody's short, they're going to be like, that's classic bull trap right here. That's a lot of volume. All right, test this node again. Here we are. It's pretty mad. I need to see somebody come in. Pick them up. Try again. What's this, like a Fed speaker or something? What's going on? All right, we got that long. Pretty quickly rewarded. But it's quite wiggly. take that at the point of control if I can. Okay. So we got stopped here. So great. I'm so happy. I'm so happy. I can explain this. This is a perfect example. Hold on. Let me put these where they need to be. So this is a perfect example of exactly what I was just talking about with you put your risk, you put your stop loss where your risk is appropriate, right? So my stop loss was here. And I mean, that was a 15-point stop loss on 3 lots. That's what I was willing to risk on that trade. And I got taken out. And then, but that doesn't mean my trade is wrong, right? So now I got back in here and I scaled for, I scaled for like 40 points. So now this stop is more than paid for. And I'm still in the same trade idea. It's just, you know, sometimes it takes you a couple times to get in. Execution is hard, especially in NQ. It's a pretty wiggly place, and a 15-point stop loss on a wiggly NQ day is pretty small. That was a lot of bid right there, 220. So that's how I'm able to control my risk and then still get back in if, you know, I see my thesis is still there. Market may play out your idea, but it tends to find the worst way possible to do it. Yes. Wow. Ain't that the truth, brother? Ain't that the truth, XY? Good morning. Good morning, my friend. Oh, there was a T-bills there? Oh, geez. I should have known that. That's my bad. I was sleeping on that. Yeah, I mean, I'm less stoked on this. We'll see what happens now that London's closed, but yeah, the VWAP bands are flat. It's going to be, it appears to be turning into a balanced day. There are a lot of people buying and selling this right here. So it is like, there's at least some volatility, which is nice. We can grab, 20, 30 points at a time. So that's been nice, just from a scalper's point of view. Better than the last couple days. That's for sure. Yeah, all this stuff right here, this is like a ton of people buying and a ton of people selling. It's just going to get crowded. Because NQ is a very, it's not the thickest product. So when someone comes in to do a fair bit of business, it's gonna get wiggly. It's gonna get violent. So you just got to ride that out best you can in those situations if you're trying to hold a trade through it. This is also what I mentioned earlier on the higher time frame. If we're going to traverse back through the balance area, it's going to be, a little ugly. It's not, whenever you're going through a value area, it's not a straight line. It's not like a low volume node. It's usually a wiggly path. Nil, don't you jinx me. You think we're going to test IB low? That's a horrible thing to say. Don't put that into the world. Don't put that into the universe. It might do it. Nice flight there. Perfect. Yes, exactly. I love when two people on opposite sides of the market can both make money in the same day. That's what's truly beautiful about a market. Everybody, we're all on the same team here. We're all just trying to extract some points from the game and, pay some bills, feed our families. That's the goal. Thanks, driver. I appreciate you, bud. You tell him. You tell Investopedia what wiggly means. That's the, I mean, that's what you got to look for, the Dom wiggles. Good wiggle, bad wiggle. It's up to discretion, of course. Yeah, see this bid. I mean, it's still here. It's doing something. Sometimes, yeah, sometimes you can sit and read order flow and drive yourself completely insane because what you're seeing is not being reflected in the price action. So it's good to have, like, you know, a sense of, not definitely a sense of humor about it, but like just a sense of perspective that just because you're seeing it doesn't mean that's exactly how it's going to play out. That's why you can't really just trade on order flow alone. You need, some sort of structure to lean on. Order flow is just like your clue at a structure point. Because, like, what is this? What is all this aggressive buying out of nowhere, like right here? We don't know. There's no way to know. And this is not a level that I have, so it's like, okay, there's nothing I can do with that information other than be like, why isn't the bid making it all the way back to test this volume up here? All this stuff. Did we really reject the weekly open that hard? I don't know. All right, Nil, speaking for yourself. That's fair. Yeah, Peter, this is NinjaTrader for sure. A lot of the tools I'm using are part of the Order Flow Labs tool set, which you purchase through Order Flow Labs and then get access to, and then those plug into NinjaTrader for you. Maybe I should look at ES. Where's this dumb thing? Oh, that thing's just chopping around too. I want to see a bunch of lots at 867. Yeah, ton. Wow, ton of absorption up here on ES at these 864, 865 spot. My goodness. Maybe this is just the fairest price of all time, and price is just going to stay here for the rest of the year. Who knows? If that's the case, we're going to have to figure out how to start trading strangles and straddles on the show. Let's see if they go get that 867 ES guy. That would be good. That would be good for us. They did. 5867 filled, 600 lots on ES. That's a fair bit for ES. It's not a billion, but that's a moderate size limit order to get filled and have price press continuation through it. This freaking 260 guy. That's true. Florida man, what's the Dow doing today? What's it up to? I assume that it's doing negative things since ES is kind of in its feelings compared to NQ. Am I right? Yeah, Madman, for sure. Just grab the free stuff. I mean, why not? Number one, it's free. And there's a lot of there's a lot of great Delta tools in there too. Better Delta studies in there. So yeah, you can start to test the waters with, like, what is it like to look at candles that color based on, Delta dominance and things like that. and just I take it for granted because I've been doing it for so long, but I don't remember what it's like to look at a candle and be like, that's green because it went up and red because it went down, because that's not how I look at candles at all anymore. I'm only looking at those colors for delta context. Dow similar to ES. Okay, thank you, Amid. Locula Ridens. Can you explain the buyers and sellers indicator and how you personally use it again on the right side of the chart? So this is not an please do me a favor. This is not an indicator. This is just a tool to show you what delta is up to on that end. So this is a delta volume profile, and it's just showing the volume of the delta that has been transacted in this 60-point rotation. So indicator is a word that implies like, it's going to give you a signal. I just want you to know this is just showing you information, and then you have to glean the information from that in order to execute however you would like to. The way that I use it is, since I am long here, I am looking for bid delta, which is this negative delta, to be supportive, and offer delta, which is the positive blue delta, to be getting run through. So like right here in this 60-point rotation here, price went up. Let me zoom in a little more so I can give you the specific breakdown. Okay, so we came back, we tested I got stopped out. We tested the 30-second London opening range, and then price rejected, went up through, and then and then we came back here to test this this bid delta was supportive, and then we got through this offer delta. So this is just telling me that buyers are willing to buy here and sellers haven't been able to break this price. So that gives me confidence to look for continuation higher. And as continuation higher happens, we want to look for the same scenarios, right? Like bid delta supporting, offer delta not winning. So it's just red guys versus blue guys. And whichever side you're on, that's the context you're trying to read. Now, if the opposite happened, price went up and came back here, and this negative delta here, the bid delta, got sold through, that gives me less confidence that this is going to continue higher, because these buyers were not able to be supportive of that position, if that makes any sense. I hope I'm explaining that okay. I don't know. If I'm not, let me know. I'm happy to try to make it clear. It's hard to explain. It's really hard to explain like the personal things that you look for on, when you're reading a trade in real time. But Mr. 400 lot guy, 267. Could see some fireworks. Could be cool. MA, what invalidates my trade? Yeah, I mean, I guess like the trade I'm currently in. I mean, I'll get stopped out for 15 points here, and then I'll be wrong. That's just where my risk is telling me I'm wrong. What invalidates the entire idea, I guess, of trying to get to this IB high? Well, I guess an IB low touch would definitely invalidate it. Any sort of push down into this lower distribution, and then staying down here in this volume node and leaving this volume node behind, that would probably make me think twice about long continuation. But I'm really just looking for this to hold up here in this distribution. Let me see if this 267 person gets filled. They did. All 400 lots, 500 lots. Very impressive. And you can see that. You guys see it come in? Also, I'm not going to be a D for a T. I'm just going to take that right there. Yeah. So this is a big passive seller. What do you do with that information? Nothing until you see the reaction. And, we're just going to watch price right now, see what happens. Can we get into this +1 band? Or is this big passive seller, going to be rewarded for this selling? We'll see. Right now, there's literally nothing to do with this big passive seller other than watch. It doesn't look like he's going to win at the moment. The bid is still very supportive. Because the thing about this, like, that is a big passive seller, but there's literally no way to know what that trade intention is at all, because, like, you're not that person. You're not that bank, or, I don't know. I guess he doesn't have to be a bank. Maybe he's just like homie sitting on a yacht partying, decides to sling 500 NQ lots to impress his friends. I don't know. Yeah, Jose, I'm going for the IBI for sure, if we can get it. But yeah, you don't know these large orders intentions. All you can do is observe that they exist, and watch how price reacts around them to give you context. Are we going to continue through that spot? Are we going to fade back into the range? Literally no way to know. You think they're nerds? There's probably some cool NQ yacht traders. I hear the Starlink's pretty good. You could probably trade from the ocean. AV24, I don't know if that's one person or multiple people. I would assume that it's one, just because it was all there at once. But it was certainly surrounded by a bunch of things. Who knows? Could be an institution. It's probably a bank. So yeah, just for my narrating context brain, I just call them, a dude, a person. But yeah, I don't have a clue. Yushin Kim, the IBH is the initial balance high. Speak for yourself, Dan. We're all cool. Everybody's cool. CoinSpec, that's a big passive seller because they had a bunch of lots just sitting on the book that were sold into. So that's not an active seller because they just had those orders sitting on the book. So it's passive because they just put orders on and waited to get filled. So the bid had to cross the spread into their offer to fill it. So the bid is the aggressor in that moment. The offer is the passive side. Oh, sure, no problem, Yushin. David Stowe, did you already cover weekly stats and account management ideas? No. Okay, cool. Yeah, I forgot to talk about that. So I had my cash account set up. I got the deposit in and everything, but my account was too old. And so it was flagged by compliance. So I had to open a new account and go through the new account application process again, which I did. I was approved on the 17th, and now they just have to, they're just doing some work in the back end, I guess, to get me, to get my funds from my old account that I just deposited transferred to the new one, and then we can start to trade it. But unfortunately, I haven't been able to trade it just because it got flagged by compliance, because I think I opened it like, I don't know, who knows, maybe like 4 or 5 years ago. And I guess that there's a lot of compliance stuff that goes into futures accounts that they have to be responsible for. So, but yeah, so yeah, no stats today. The only thing I could show you is I did trade this account on Tuesday, or no, not on Tuesday, on Monday. But I mean, it's not really worth showing 1 day worth of stats because that's not what we're into. But yeah, hopefully that account is all set up and ready to roll by next Monday so we can start it. I'm gonna start it with, we're gonna do $10,000, and I'm gonna keep half of it in the brokerage account and then half of it in a high yield savings account. And that's part of what I'm going to show is, how to manage your bankroll in multiple places so that, it's also earning some passive income for you, how to take when you want to pay yourself out of that whole nut, all that stuff. So hopefully if the brokerage people get back to me before Monday, we can get that rolling next week. Jim's here.
Yo. I'm going to take that class.
The champion.
How are you, man?
Let me formally say congratulations on winning the Stowe versus Jim bet.
All right. I'm looking forward to the Pittsburgh special.
Dude, me too. Honestly, I'm so excited that I lost because I have so many good ideas of what I'm going to put in this box. It's going to be awesome.
Oh, man. Well, don't go overboard. Don't go overboard.
Oh, I'm already going overboard. It's going to be sick. It's going to be so sick.
Oh my God.
I love sending people stuff from Pittsburgh, man. It's like, yeah, it's one of my favorite things. So I'm super excited.
Wow. All right. Well, it was a lot of fun. Everybody had a lot of fun and we learned a lot. And well, I'm sure there's going to be more of these things. So
yeah, absolutely. I can't wait. I want to do the commodities one that you and Tracy were talking about. That's going to be cool. Getting me into other markets, that's what I'm interested in. Yeah.
No, and that could be a wild one too, because those commodities move. That's why we have the hot commodities report. I mean, they're moving.
Yeah, I'll place the nat gas trade and be done in a millisecond probably.
So I've been thinking though.
Okay.
So I guess Leo wears a cap.
Yes.
I spelled CAP.
Yes.
And if you had a volume cap, you would say VCAP, right?
Yes, you would.
Okay. All right. So just thinking of
shots fired on the VWAP gang, I hear. You're right. Maybe I got to switch. Maybe this is the moment I'm converted.
Well, the only reason why I even mentioned it just now is you just used the word DOM again.
Yes. And did we talk about that off screen or on? Because you should tell the folks why you call it DOM instead of DOM.
Yeah. So in the early days, remember, trading ladders only popped up like actually they came up in they first started with the NASDAQ direct access level 2 stock traders, right? And this is the end of the 90s.
Okay.
And then the futures guys are like, oh, that's cool. I want to do that. So the futures guys built this thing and they needed tech guys to build it because we're pumping in, price ladder data, right? Directly from the exchange as fast as possible.
Yeah.
And so there's this whole tech thing grew up, right? All the programmers and all the tech guys were programming this thing. So it gets from the exchange through the middleware to your screen and you see the transparent pricing. So the developers would refer to it as a DOM. The traders would refer to it as a dome. And once that riff happened, that line was drawn in the sand and there was no stepping over it. So that's
yep. So this is just traders versus tech dudes, and that's the reason.
That's it. That's it.
Okay. It's just that simple. That's awesome. I love that story, man. I love that story.
Oh man, I'll think of some other ones from yesteryear. There's a lot of them.
That's cool.
Anyway, so thanks again for stepping in early today, Stowe. That was fantastic. Appreciate you doing that.
I'm just chilling here, man. Just trading.
All right. You're gonna have a great weekend. Hopefully, you have some weekend plans with the fam.
Oh yeah, we're going on back to see my parents, and they live like 4 hours north, in a very small town. So we do, small town America Memorial Day parade, all that good stuff. So that'll be cool.
Yeah, yeah. No, I remember those days when we lived in Chicago. My my Mrs. Kaggs is from Lowell, Indiana, really small.
Ooh,
And the
okay, yeah.
biggest thing of the year was the Memorial Day Parade and the Labor Day Parade.
Yep. Yep, that's right. It's nice. It's nice to get out of the city and go home and redo all those, small town things. It's also fun. It's so cool to have a kid and do that, because you can be like, it's literally the parade I was at 35 years ago. And then watching my daughter experience that for the first time is insane. That's one of the most insane experiences of being a parent, is watching your kid relive the stuff that you grew up with.
Yeah, for sure, for sure. Well, you'll be back this afternoon, right?
Oh yeah, me and Leo, we'll be
All
chilling.
right. All right, fantastic. Well, I appreciate you. I'm just going to grab the screen real quick and do a really quick edge report. I'm just going to really focus on the ES for now, and the bonds, but it'll be a fast one. So thanks again, Stoll.
No problem. See you, chat.
All right, all right. Let's just pull up an E-mini S&P chart right now. This is an interesting chart because the initial balance has been set, right? We have the low of the initial balance at 58.42. We'll round it up to 58.43, and then we have the top of the initial balance right at that JX4 level at 58.80. We've been trading with no breakout yet. There's no breakout yet of this initial balance. Right now, the volume profile on the session is really pretty. It's a very nice textbook-looking volume profile right now, with the point of control sitting at 58.59. And from a breakout point of view, from edgeful.com, we have a 62.5% chance, and today, this is a Thursday stat, of a single break. In other words, a 30-minute candle closing above or a 30-minute candle closing below. We have a 25% chance of a double break, candle closing below, and then a candle closing above, or vice versa. We have a 12.5% chance, little baby percent chance, of no break. In other words, no candle for the rest of the session ever closes above the initial balance or below the initial balance. So there's a little bit of uncertainty here with the Edgeful stats on what's going to happen today, but the 62.5% single break is the most dominant. The other thing to note here is there's only a 51 roundup, 52 handle range today, right? And the 14-day ATR is, if I can move this up a little bit, 109. So we're not even 50% of the way to an ATR today. So maybe we're settling, we're waiting. I don't know. We had some data come out today, which was pretty interesting. Let's take a look at that bonds, though. The bonds have flipped a little bit to the positive side. Remember, we were down a few ticks this morning before the open. We do have a single break that's happened above the initial balance. Right now, we're just tagging that JAX1 level at 111 even. So as Deli pointed out, it's important to keep an eye on the Treasury bonds when you're thinking about equity trades to see what's going on, if it's a complete sell-off across the board or not. Right now, everything is kind of tight, right? We have a tight range in the bonds. We have a tight range in the stock index futures. We have the JAX1 level. That's super important. It'll be hard to break through that on the bonds at 111 even. At the bottom, we have that S1 that's kind of framing the conversation as well at 110.03. So that is what we're looking at here as well. One last thing I might as well mention, since we got a minute left, the Bitcoin. The Bitcoin making all-time highs again. 111.510, 111.535 right now. This is a daily chart. That for whatever reason, whatever the fundamentals are here, this is a super, super strong move. And this is a 5-day drive to the upside. Look at the moving averages. They're just sloping up. We've been overbought forever in this market. So I'm starting to lose faith in my stochastics here on that, on the Bitcoin. Intraday, bumping up against some key levels here. And this is important. We talk about Mentor Q all the time, but look at that. We bounced up against that 1-day max, and that's their secret sauce, proprietary calculation. And that is serving as resistance, right? We haven't been able to get past that. We touched it once. And that's at 112.065. So keep your eye on those Mentor Q levels. R2 is a little bit higher than that right now. We'll see if we get a breakthrough to the upside right now. Firmly trading above session VWAP all day long. So again, a bullish bias here in the Bitcoin. Large P as in Paul shaped distribution on the volume profile. So that is your end of day edge report. Appreciate everybody being here with us this morning. We had great guests. We had great everything today, as usual. Appreciate Stowe jumping in with Chris. Fantastic. Everybody in the community, thank you for being here in the chat. We're looking forward, again, 2:30, hot commodities report, me and Shai. Then right after that, Stowe and Leo are coming back to trade the close, Order Flow Labs guys. So we will see you this afternoon. Have a great lunch.